all your stock related queries. So don't forget to call us or WhatsApp us. The numbers are there flashing on your screens right now. Viewers, and on the show, I'm being joined by Mr. G. Chokalingam on the fundamentals, and a technical guest will be joining us very shortly. Welcome to the show, Mr. Chokalingam.
Yeah, good evening.
Good evening. Now, let's get started with the first query on the show, which is written to us by Deepak. He hails from Dubai and he holds 600 shares of Vidanta. He bought it at 308 rupee a piece, currently sitting on a profit of almost 79,000 there, and he's looking for a one-year view on the counter. So currently, Mr. Chokalingam, it's trading at 439, and if we talk about today, so it was, up in trade today over 1.5%. So what's your sense on Vidanta? Are you, bullish on the counter?
Not really, because the oil segment, according to me, will have a major stress. Already it is down about 17-18% from the 52-week high, and it is expected to go down further because of deflationary signs, which will emerge on account of tariff war. And that should affect even the metal businesses slowly. I would prefer Hindustan Zinc to Vedanta. Yes, it is also into metal, but it has got a precious metal, which is silver, which is doing very well on LME. So whether it is short term or long term, Hindustan Zinc looks far superior to Vedanta.
Understood, understood. Thank you so much for that. Now, let's go across to another query which is written to us by Arjun. He hails from Kolkata and he's asking whether it's the right time to buy Power Grid at current levels. He's looking, although for an 8-month view, but still, Mr. Chokalingam, I'd like you to shed some light on Power Grid and its fundamental performance, and how are you viewing it, holistically?
Yeah, for two reasons one can, consider buying it. One, the stock price has corrected a lot, and therefore the PE ratio has shrunk to around 17. And, so valuation comfort is there. The price point also gives you comfort. And then historically, it has been a growth stock in a longer period. So therefore, one can consider buying this stock.
Okay, Mr. Chokalingam, thank you so much for that. Now we have another WhatsApp query, but before that, I'd just like to request our viewers there. Viewers, this is your golden chance to get all your stock-related queries answered. So please don't forget to call us. The numbers are there flashing on your screens right now, and we are here for, a half an hour. So we're waiting for your calls there. And we have Vikram query. Vikram, who has, who has written to us on WhatsApp. He hails from Hyderabad and he's asking whether it's the right time to invest in Bajaj Finser for long term. So Bajaj Finser, Mr. Chokalingam, how strong is the counter, and do you advise Vikram to, stay invested in it for a longer period of time?
Yeah, if somebody is willing to hold for beyond 2-3 years, yes, valuation is slightly stretched, but this company, doesn't disappoint in the longer period. Currently, it's slightly stretched, but then the valuation parameters can shrink beyond 2 years. And considering the management quality, yes, for long-term investors, it could be a good stock to buy and hold.
Understood. Thank you so much, Mr. Chokalingam, for that. And now we are being joined by our technical guest. Sarvendra is joining us on the show. Hi, Sarvendra. Good evening.
Good evening to everyone.
Yes, so, we were discussing about Bajaj Finser, and so what's your sense? How are you viewing it technically?
Within the financials, I think...
I'm posing this question to you. How are you viewing Bajaj Finser?
Can you hear me?
Yes.
There seems to be some technical issue. Can you hear me?
Yes, I can hear you.
Yeah, so as I said, on Bajaj Finser, what I believe is that right now the stock is slightly in a corrective mode. I would believe that the next couple would give more clarity. So I would get it out in 30, 1900. That area is a good support area. So purely on the angle.
Okay, so now let's go across to caller in the meanwhile. First caller on the show joining us from Bengaluru. Hi, Tirumurthy.
Madam, good evening, madam. This
Good
is Trumurthy
evening.
from Bangalore.
Yes.
Actually, first of all, I would like to thank Mr. Chokkalingam for his great insight into the market and scientific analysis for the stock. I would like to know whether I can continue with the SML Isuzu, which I have bought 750 at the price.
Yeah. Okay.
Whether
Okay.
I can continue to hold.
And you can continue to hold. Absolutely correct. So, Mr. Chokkalingam, SML Isuzu, he has made some significant profits with this investment of his. But do you suggest him to, stay put with it and just hold SML Isuzu for a longer period of time?
Fundamentally, no. Certainly, it's a sell. Because it is trading at around 40 PE on a trailing basis, which is substantially costlier than M&M, which has taken over this company. I've been tracking M&M for nearly 2 decades. I'm pretty sure M&M management is extremely conservative. I don't think they are going to throw away enormous valuation to buy out the balance stake held by the retail investors. Because they got at only less than one third of the current market price from the original promoters of SML Isuzu, and that kind of strategy would continue. That's my strong expectation. So fundamentally speaking, it's a sell, but then it has got a very low floating stock. So the investors have to be a little cautious in exiting the stock because there is a lot of positive perception in the market. So one should make use of it by exiting the stock in a phased manner, is slightly in a longer period.
Right, right. Thank you so much, Mr. Chokkalingam, for that. And I'd also like to take Sarvendra's view on it. Sarvendra, if we look at the charts, currently it's dropping down, and it's in its downward trend, if I may say so. But from the levels of 750 that Mr. Tirumurthy has, clocked in, and to the levels that it's currently trading at. So do you think that these are the correct levels for somebody who wants to book partial profits?
I think the stock was very overbought, and I think around those 4,500 levels, I think a lot of medium to longer term target setups also got complete, and we had a small bearish kind of a setup, which is a topping out pattern on the wave principle, what we follow. So I think going forward, I would assume that highs at 4743 and that 4,500 mark, that area, I think would not get challenged much, and any pullback will get sold into. So either here or maybe 100, 200 points on the bounce at around 4,200, I think he should be booking some profits. Yes.
Understood. Thank you so much, Sarvendra, for that. Now let's go across to Shankar, who is joining us on the phone line from Chennai. Hi, Shankar. Good evening.
Good evening. Hello.
Yes. How can I help you today?
Yes, I am holding 700 shares of Piramal Pharma.
Yeah.
At the rate of 246 rupees.
Okay.
6 months back I bought. Now it's trading around 200 rupees. Now shall I accumulate further?
Okay. And for how long are you planning to hold?
Hello?
Yes, Shankar, for how long are you planning to hold the counter?
Yes, minimum 6 months.
Minimum 6 months.
It will give large sum of profit. I can ready to wait 2 to 3 years also.
Understood. Okay. So firstly, I'd like to take Sarvendra's view on it. Sarvendra, coming to you, Piramal Pharma is the counter in which, the prices had dropped down from 246 levels that, Mr. Shankar had bought in, and currently to 201. And he is also incurring a loss of almost over 31,000 is what we can see. So what's your sense? What are the charts indicating? And also, is it like a buying on dip opportunity there?
I think he should wait out the whole setup. I think there's been a decent long-drawn correction. There's no doubt about it. But still, I think we'll have to wait for a good monthly close. So I think we are still early into this month. We are just for the first 3 days that we have traded. So this month's close is very, very important as to if we are turning on this one or not. So I think he should not do anything new. Whatever he's holding, I think he should hold. And by the end of this month, I think there will be a more clearer picture. If we get a green close, possibly then he gets a bounce back towards his prices or slightly more. But I think he'll have to wait out at least, if not for the whole month, at least you'll want to see the first week, 10 days of the month and then take a call. So probably if he calls up next week or next to next week, we will have more clarity on this one.
Right, right. Thank you so much for that. Now let's go across to Udit, who's joining us on the phone line from Mumbai. Hi Udit, good evening.
Good evening, ma'am. Good evening, panelists. I think Lord Ganesha has been pretty kind to me in the evenings. In the morning, I am normally cannot get across to ask profit, but the evening I do.
Okay.
My query is on Hinduja Global Solutions.
Yeah.
I bought this at pretty high price, 1391, holding 16 shares.
Yeah.
It has done a beating of 523. I am holding this counter for the last couple of years, maybe more.
Okay.
I just need to know the fundamentals of this, and do I continue to hold or switch on to some other counter?
Absolutely. So, Mr. Chokalingam, you heard Mr. Udit, because he has been in, he has stayed invested in it for a longer period of time in Hinduja Global. So, fundamentally, are you viewing it as a positive counter, or should he be switching his positions at this particular time?
Fundamentally, it looks, too good to hold after the severe correction. So it might take much longer, but if you look at the last 5-10 years, it always rewarded the investors in a very great manner. Right now, it's going through a little difficulty, poor single-digit operating margin. But I think the pain is in the price to a large extent. I would give a hold for medium to long term.
Okay, okay. Thank you so much, Mr. Chokalingam, for that. Now we are being joined by Mansingh on the phone line from Kurnool. Hi, Mansingh. Good evening. I think we've lost the line there, but we have his query. He's asking whether it's the right time to buy Phenotex Chemicals at the current levels. So, firstly, he hasn't mentioned the time horizon, so I'd like to take both fundamental and technical view on the counter. Coming to you, Mr. Chokalingam, first on the fundamentals. Are you optimistic on Phenotex Chemicals in this, and how are you viewing the space also in particular?
It's slightly stretched the valuation. So if somebody is holding, they can hold, but I would not recommend a buy. It's trading at around 26 times. I believe the trade war is slightly negative for chemical industry, because chemical industry is one of the few sectors which directly get impacted by deflationary signs. And as I mentioned earlier, the trade war would be definitely deflationary in nature. So it's a hold for medium to long term, but if in case stock corrects at least another 10-15%, then one can consider buying the stock.
Yes, yes. So, the space is going to see some bit of a pain because of the global uncertainties and the tariff situation that is happening. But Sarvendra, keeping all these aspects in mind, what are the charts suggesting?
It's a thinly traded stock, so and it's almost corrected 50% from the high. So percentage-wise, as I said, possibly there could be a possibility that worst could be over in the sense for the next 3-6 months, as long as it holds a 200-210 support area. So it's conditional. The view is little conditional to the fact that 200-210 remains very, very crucial for the stock going forward. Anyhow, the stock has to hold this if the medium to long-term setups have to repair themselves. So for the long-term trend to again repair itself and go up, I think these are the important levels. Next 1 to 3 months are critical, and any basing out formation or a pattern, if it is visible, then we'll be in a clearer position to call. But as of now, as I said, it's more a hold. Since it's already corrected so much, I can't tell him to exit. But on a bounce, if at all there are volumes, then he can call us back and take a view. As of now, hold with a stop at around 210.
Okay, okay. Thank you so much for that view. And we have another WhatsApp query now. Jayant has written to us and he holds 65 shares of KRN Heat Exchange. He bought it at 220 rupees and he's looking for a long-term and a short-term view on the counter. So firstly, I'd like to come to you, Mr. Chokalingam, on the fundamentals of KRN Heat Exchange, because it specializes in the manufacturing, finance and tube type heat exchangers. So, is this space a very optimistic space to be invested in? And how is this counter, outperforming its peers?
The company has done well in last 2 years, no doubt about it. But I'm not comfortable with the valuation multiple. It is almost in triple digit. So I would give a sell call if stock further moves up even 5 to 10% from current level.
Okay, so a sell call from a fundamental standpoint. And Sarvendra, if I come to you talking about the technicals of the company, so do you also hold the same view?
See, the data here is a little less in the sense that we have data, what I can see on my charts is somewhere from 2024 onwards in that to the later half. So not even a year's, almost only a year kind of a data here. Not much that can be done on the long term here, but yes, one thing is very clear that around that 1,000 mark, the psychological barrier, that's been holding prices for the last many months now. So for anything fresh happening here, that number has to be broken out. But I would kind of avoid such stocks at the moment, technically speaking, because I don't have too much of handle on the data.
Okay, okay. Thank you so much. Understood. So with that, we are being joined by Srinath on the phone line from Karnataka. Hi, Srinath. Good evening.
Good evening, madam. I am Srinath Patil from Hubballi, Karnataka.
Yeah.
Madam, I am holding Bajaj Housing Finance at an average of 124.
Okay.
Total 350 shares, madam. I am willing to give 2 to 4 years for this, madam.
Okay, okay. So
I would look to know, is it a good choice or not?
yes. So Mr. Chokalingam, the housing finance space, firstly, I'd like to take your perspective on that as well. And then Bajaj Housing Finance, how well is it positioned, as compared to its peers?
Yeah. Housing finance, not only housing finance, entire NBFCs will have a little stress this year because entire banking and financial sector, the growth has moderated substantially. And secondly, the banks now are more, better position because of the exposure to CASA deposits. They have access to cheap deposits. And there is a convergence of banks and NBFCs in the housing finance and gold loan businesses in a very big way. This has happened in the recent years. So considering all that, there's going to be stiff competition between the banks and housing finance companies as well in the lending business, particularly for the housing finance. And now coming to Bajaj Housing, there is no doubt it's a part of a great management and excellent, performance in the recent time. But however, one has to understand the fact that it is trading at around 4.5 times price to book value. And even if somebody wants to hold it for 2 to 4 years, at least for next 2 years, the performance is already discounted by the market price because it is trading at 4.5 times. So I would strongly recommend PNB Housing, which is trading at 1 time as compared to 4.5 times Bajaj Housing. And the only concern in PNB Housing was that the CEO quit. But with more than 25,000 crore of market cap and banking of PNB Bank and also huge institutional investors backing as a shareholder, I don't see any major concern or constraint in recruiting a suitable leadership for PNB Housing. So the day they find a suitable leadership, I think the stock can give a possible spurt in the short term itself. Otherwise, also fundamentally in terms of valuation, PNB Housing's far superior to Bajaj Housing Finance.
Okay, so it's a PNB over Bajaj Housing Finance by Mr. Chokalingam. And Sarvendra, talking about the chart, so is there any upside surprise that we can actually anticipate?
I think the problem here also remains the same like the last setup. The data is only from 2024 second half, I think October, November onwards. So you don't have a clear handle on the data. There's still limited data to do any long-term, medium-term kind of qualitative studies. So purely on a short term, I can say that around 110, 105, there have been supports over the last couple of months. But beyond that, there's nothing much that I can add.
Okay, okay. Thank you so much for that. Now let's go across to Bhaskar, who's joining us on the phone line from Hyderabad. Hi, Bhaskar. Good evening.
Yeah, good evening.
Yes, how can I help you today?
Yeah, I'm holding 200 shares of Transrail Lighting
Okay.
at price 760. So
Yeah.
I want to know both technical and fundamental.
Okay, and when did you invest in this counter?
Some 15 days back.
Okay, okay. So it's a recent purchase.
Yeah.
Understood. So, Mr. Chokalingam, are you having any sort of coverage on Transrail Lighting? And if yes, so are you optimistic on the counter?
A new company, I believe. In terms of valuation, it is trading at around 27.5 times, and also it has already rallied a lot. So purely based on the PE valuation, and also if I look at the growth in FY25, I think it's fairly priced at the current price. So I would give a sell call in case it jumps 5 to 10% from the current level.
Okay, so that's a sell on Transrail Lighting from a fundamental standpoint. And Sarvendra, I'd also like to come to you because I'm sure that there must be not much data available there from the technical standpoint. But still, if you have any sort of view regarding this counter.
Yeah, very, very, again, short-term view that has to be kept here because nothing much on the data side. No collation in terms of you want data to be at least 2-3 years. For someone like me, at least 3 years is minimum for a long-term kind of a 2 to 3 years is the minimum for a long-term study. Short-term, the stock is making higher bottoms. So I think as long as it stays above 740, 730, I think the short-term bias is up. Rest, I think, being a new stock and being in a blue sky territory, almost in a blue sky territory, I think it can keep doing its own thing till the trend reverses.
Understood, understood. Thank you so much for that. Now we are being joined by Siddharth on the phone line from Hyderabad. Hi Siddharth, good evening.
Good evening, madam.
Yes, how can I help you today?
Madam, I am holding 100 shares of Paredi Phosphates.
Yeah.
I purchased at 218.
Yeah.
For another, I would like to hold it for another 4 months.
Okay, okay.
So I would like to know the expert's view, madam.
Understood. So Sarvendra, I direct this question to you. Paredi Phosphates, he bought it at 218 rupees. He's incurring a loss currently, but still, how are you viewing it from a 4-month, perspective?
See, within the short term, the stock has already nicely performed and moved up. So I think the risk rewards on the short term are more or less done. The only thing is that since still you don't get a clear reversal, you've not got a very clear reversal on monthlies and weeklies, you would want to just give it maybe a week, 10 days. But for that, I think he should keep a stop loss around 204. So with a stop at 204, if he wants to hold. But I think broadly the upsides in the short term are done.
Okay, okay, understood. So a stop loss of 204 is what our experts are suggesting, Siddharth. With that, we are being joined by Govind on the phone line from Hyderabad. Hi Govind, good evening.
Yeah, good evening, ma'am. Good evening to channel of the ma'am, actually.
Yes.
Ma'am, actually, I have brought GMR Power Urban 1 year back, 6,000 shares at the price of 129 rupees, ma'am. This is a smart meter, actually, boom is there, smart meter connection. Last quarter, the results are not yet good, ma'am.
Yeah.
Can I hold, ma'am, at least another 1 to 2 years, or can I at least 15 to 20% the profit is expected, ma'am?
Okay.
Will it hold or sell, ma'am?
Okay, okay. So, Mr. Chokalingam, I'd like to come to you since, he has been invested in it for the past 1 year and he is incurring a loss of over 1 lakh rupees is what we can see. So, GMR Power, in the power space, do you think that it's witnessing some sort of a pain? And if yes, so then, should he be booking his losses at the current moment?
One can hold GMR Power. Yeah, at bottom line there is a pressure, but on SOTP basis, when we look at it, it has got a very rich, business segments. In fact, it also holds a lot of land bank. There is a possibility of unlocking significant value from that. And so considering all these, assets in various business segment and also opportunity for the power business to turn around in a big way, I would give a hold. In fact, if marginally declines, one can buy. From current level, it is quite possible to get, anywhere 15 to 20% return within a year's time in a normal market condition.
Okay, okay. Thank you so much, Mr. Chokalingam, for that. Now, let's quickly go across to Vijay, who is joining us on the phone line from Hyderabad. Hi, Vijay. Good evening.
Good evening, madam.
Yes, quickly go away with your question.
Madam, I want to buy 20,000 shares at present at Sadhna Nitro Chemicals, madam.
Okay.
Is it right time to buy or not?
Okay. So, very interesting query. Mr. Chokalingam, quickly coming to you. He wants to buy 20,000 shares of Sadhna Nitro Chemicals. So, do you advise him to do that?
No, first of all, you should know that the market cap is only 316 crore rupees. So this kind of small micro cap, irrespective of the fundamental, it comes out with a lot of risk. And secondly, it is trading at around a trailing P of 65. So if we can take an enormous risk, you can consider this stock.
If you can continue with the risk, then you can probably continue with this investment of yours. But with that, I'm afraid that we are running short of time on this edition of Ask Profit. But thank you so much, Mr. Chokalingam and Sarvendra, for being there and always patiently answering, all our viewers' query. Thank you so much. And viewers, with that, it's a wrap on this edition of Ask Profit. But please don't go anywhere, as we have a lot of action lined up ahead on the other side of the break.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं दिवाली के अंदर.
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy to India Inc.'s biggest voices, join us as we decode what these reforms mean for businesses, investors, and you.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is
Benchmarks end over 0.5% higher, with Nifty closing above the 24,700 while the Sensex gains over 400 points. Nifty Metal emerges as the top sectoral gainer. Mid and small cap indices outperform Nifty and Sensex. On day one of its 56th meeting, the GST Council approves key measures to simplify compliance for businesses, including greenlighting a time-bound GST registration process for MSMEs and startups, reducing registration from 30 days to just 3 days. US trading firm Jane Street files an appeal with India's Securities Appellate Tribunal, challenging SEBI's accusations of market manipulation. Kotak Mahindra Bank is back in discussion with the government for the IDBI Bank stake sale. Sources say Kotak Bank is in active talks to submit a bid next quarter. Swiggy increases its platform fee to 15 rupees per order, marking the third hike in 3 weeks amid rising demand during the festive season. This is the highest fee since the charge was introduced in April 23. Maruti Suzuki launches a mid-size SUV Victoris. The car has achieved 5-star Bharat NCAP safety rating and will be exported to over 100 countries. Over 300 dead in Himachal floods so far as the swollen Beas River causes half of the Bhanu Bridge to be washed away. Meanwhile, the deluge in Punjab leaves 30 dead and over 3.5 lakh affected. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's go to our top focus this evening, the GST Council meeting that is underway, and we understand from sources that multiple states have sought clarity on how the rate rejig will impact their revenue. Along with this, we're also expecting some relief for exporters and small businesses. Let me quickly go across to my colleague Shrimi Chaudhary, who's been tracking the meeting relentlessly, standing outside since the morning. Shrimi, take us through the latest. We understand that this extremely significant meeting is still underway. What are your sources telling you?
Yeah, absolutely. It's been 8 to 9 hours and the GST Council Day 1 is still underway. And in fact, currently as we speak, the discussion are ongoing on the rate rejig, the items which we have been reporting. Remember, we've been talking about the massive rate cut which Centre has proposed and where they are exempting a lot of items from GST and then a lot of your essential and household item proposed to be in the lower rate, which is 5% from current 12 and 18%. And of course, the lot of your, the aspirational goods going to the lower rate, your small cars going to the lower rate from the current 28% and the special 40%. So this massive rate rejig pitch which Centre has, given to the GST Council, on that states are giving their opinion. And what we are picking at this point that multiple states, including Karnataka, Punjab, West Bengal, Sikkim, as well as Telangana, has voiced their concern on the revenue impact. And in fact, they are saying that they need some estimation on how this rate rejig is going to impact the revenue. Is there any estimation on that which Council can provide? And also they are talking about if they could get some sort of revenue protection. Now, if we talk a little broader here, that usually every state commission come out with a revenue sharing model where state and Centre gets their revenue sharing. 60% is currently Centre gets and the 40% is state. So we are currently getting sense that states want to assess the impact on their revenue after this whole rate rejig exercise, and that is why there is no consensus so far as moving to 2-slab structure is concerned, which is 5% and 18% from the existing 4-tier structure. Now, what we are also picking at this point that the states are going to discuss this more, maybe probably tomorrow, as the day 2 meeting is going to be held tomorrow as well. Meanwhile, they have approved certain processes, some compliance issues which has been ailing certain businesses and industry. For example, your registration. So now your MSMEs and startup will get to register more faster from 30 days now to 3 days. Then of course the refunds process is getting more efficient now. The
talking about making it automated. So all that sort of process and compliance has been approved by the council. But as far as massive rate rigging is concerned, the states are voicing their concern, voicing their opinion at this point of time as we speak. Sanjana?
Thank you so much for that. We'll continue tracking the GST Council meet. Remember, that is still underway. We're expecting another meeting that's going to be taking place tomorrow. Very, very significant day. And what's going to be important is our continuous coverage on the same. Meanwhile, let me bring in a reaction that we got in earlier of the Andhra Pradesh, the state actually supporting GST reforms as per the state FM, the finance minister. Let's listen into his rationale.
We are supporting the major reforms in the GST sector which are being proposed by Government of India. Most of them are going to help the common man and poorest of the poor. They are coming from the food sector, education, health, steel, cement, textiles, all the reforms which are being proposed by the Government of India to bring down the burden on the common man. As a Telugu Desam Party, President Supremo, Mr. Sri Nara Chandrababu Naidu has taken a stand to support the reforms initiative taken up by the Government of India.
Meanwhile, the GST Council has reportedly approved lowering the GST on footwear and apparel priced up to 2,500 rupees to 5%. This is the report coming in from PTI. Currently, footwear and apparel priced up to 1,000 are taxed at 5%, and beyond that threshold, 12% GST is levied. Meanwhile, the All India LPG Distributors Federation has written to the Finance Minister requesting a reduction in the GST on LPG gas stovepipes, popularly called the Suraksha hose, from 18% to 5%. The Federation's contention is that this hose is not a luxury item, but a crucial safety component in residences. Now, since LPG is already under essential commodities, imposing high GST on a safety accessory runs contrary to the government's vision of providing affordable LPG to homes. And now on to how the markets fared today. The Nifty and the Sensex closed the day's trade 0.5% higher. The Nifty closed above the 24,700 mark, while the Sensex gained over 400 points. Nifty Metal was the top sectoral gainer, with the mid and small cap indices outperforming the Nifty and the Sensex. Top Nifty gainers were Tata Steel and Hindalco, while the top losers in the index were Infosys and HDFC Life Insurance. Meanwhile, Swiggy today has increased its platform fee on food delivery orders to 15 rupees, up from 12 rupees. This 25% hike has been rolled out just as festive season demand picks up. The food delivery giant had already experimented with a 14 rupee fee in select cities last month. My colleague Agni joining us with more details on this.
Right, so the latest development coming in from Swiggy, platform fees for food delivery has been hiked by 25% to 15 rupees from the earlier 12 rupees that was seen across most locations. Now remember, this is happening as the festive season demand surge is picking up across the country, and there's expected to be quite a windfall as the revenue from this hiked platform fee picks up. Now remember, Swiggy had tested out a 14 rupees platform fee across select pockets of high demand last month to see what kind of a response it gets, and this also comes on the back of Zomato hiking its platform fee by 20% yesterday. So the competition in the food delivery space is heating up as companies struggle to maintain their profitability and improve margins, but as of now, that's the latest update.
Right, thanks Agni for that. Moving on, a major legal standoff has resurfaced between trading giant Jane Street and market regulator SEBI, with Jane Street accusing SEBI of withholding vital evidence and denying a fair hearing in its ongoing probe. My colleague Charu here is with more details.
So high-frequency trading firm Jane Street related firms and Jane Street itself has gotten out and approached the Securities and Appellate Tribunal. What they are challenging is the SEBI order that had come a few months back, asking them about, submitting thousands of crore rupees in an escrow account. Now, as per the documents that NDTV Profit has reviewed, which include the grounds on the basis of which appeal has been filed against the order, mentioned that Jane Street had asked the regulator to give them information and access to certain documents that form the core of the order that was passed against the Jane Street entities. These included correspondence with the National Stock Exchange and also some other transaction related and several other details. However, when these documents that were claimed to have been asked from the regulator by the entities were not given to them, they went ahead with the appeal. Now, we must also understand that Jane Street itself has agreed in its appeal documents that it was going to be getting a hearing on September 8th and 12th with the higher officials of the market regulator, Securities and Exchange Board of India. However, it has gone ahead with the appeal and has said that in the in a manner that should be fair and transparent and more fair and in the aligned in alignment with natural justice principles, Jane Street should get access to these documents and has appealed against the SEBI order.
Thanks for that, Charu. Moving on to what's happening internationally. After the recent SCO summit, India, Russia and China showcased strengthened strategic and economic cooperation. India and Russia signed $100 billion worth of energy deals, including long-term oil and gas agreements and joint infrastructure projects. China pushed for expanded trade corridors and security collaborations within the SCO framework. But the US remained notably silent, with President Trump yet to comment on the summit or shifting geopolitical alliances in Asia. This silence contrasts with the active steps taken by SCO countries to deepen regional integration, signaling a shift in power dynamics that is impacting India's foreign policy balancing act. And to give me more details on this, today I'm joined by Manish Singh, who will be providing us deeper analysis on these developments. Manish Singh, CFA, Chief Investment Officer at Crossbridge Capital. Good evening. Welcome to NDTV Profit. With India and Russia signing these extensive energy deals, China expanding regional projects, and we're seeing the kind of bonhomie taking place at the SCO summit between these leaders, especially in light of the volatility that we've been seeing ever since Donald Trump came to power. How does Donald Trump's silence affect India's strategic positioning?
Yeah, I would say that, India should really see this tariff as a blessing in disguise. Because if you look at why US does not tariff China as much or why they backed up so quickly, it is very clear because the Chinese economy is much stronger and bigger. So if you see that somebody is trying to put a tariff on you, and if you cannot do anything about it at this time, your only lesson should be that one has to use that as an opportunity to make the domestic economy and domestic market stronger. I was never a believer in Quad, the Quad, Japan, US, and Australia and India. To me, this was always a charade right from the beginning because India and US is not an equal partner, not even competing at the same scale. That applies only to China and the US. So US can impose tariff, but it's up to India now to respond because India is a price taker in the sense that it cannot respond to the same extent and the same manner as China would. So as far as India is concerned, I would think that they should see this as an opportunity to develop and to really become a big power. Why does India not have its own technology company? Why do we use Google or Microsoft and everything else? China doesn't use that. So I think that this is an opportunity for India and Indian businesses. So far, not invested as much in R&D, particularly when it comes to tech, and have more been on the service side to really have their own product and to have a leverage, because India does not have a leverage in this. And therefore, I think that's something India should draw a lesson on. Until such time, the US is going to impose the tariffs and rules that it wants to.
Okay, so what economic risks and growth opportunities then should investors watch for as these SCO countries deepen cooperation amid the United States' silence?
Yeah, so when I look at, the convention and the summit and everything was good, but when I look at the dynamics of it, so China wants to sell products. Japan wants to sell products. Russia wants to sell products. India wants to sell products. Who's the buyer? To me, that has always been the question. So if these countries are looking at Indian economy or Indian consumer base as a buyer, and if India wants to be the buyer, then where is India going to sell its product? So what India could do in return is that India could get a lot of investment. That's especially from Japan. If you look at Japan, they have a massive surplus. They've had years and years of trade surplus with the globe, and they've accumulated lots of reserves. So what India should ideally be looking to do is to draw on this capital, make the investment that India has to make in infrastructure, in R&D, in technology, in everything that India should be doing to develop its internal market. And as a price for that, open the consumer market, the Indian consumer market to the exporters from these companies and these countries. That is going to still take a few years for India to develop and get to the same state where China is currently. And I'm not saying that China is going to just stop and not develop itself, but I think that is the only way you can get leverage, is that there has to be a trade, there has to be a deal. So in turn for capital, which is going to get the development going much faster and sooner, and technology, and both Japan and China has technology, if you want to partner with them. That will, in my opinion, will be the right way to look at it. But India has to use this, not just negotiate and get the tariff down, because that's what likely is going to happen, and then go back to business as usual. I don't think India should go back to business as usual with the US. India should be looking to develop its own market, and Indian businesses should be very well aware that this may happen again.
Right.
And last but not least, US, and I've seen in some quarters, they're talking about making restrictions on H-1B visa holders. This could go to a next level where the people working in India for US companies could face tariff. I mean, it's a ridiculous thing, but I think that that could happen as well. So, yeah.
All right. Thank you so much for that. We'll continue tracking these key developments. Let's remember this is as the US is in fact silent. Thanks so much for your time, Manish Singh. Moving on, SEBI Chairman Tuhin Kanta Pandey flagged the issue of insider trading at an address to MDs and CEOs of listed banks earlier today. Speaking on the critical role of SEBI's prohibition of insider trading or PIT regulations, he said that the role of the compliance officer in banks was not merely a symbolic one. He stressed on the need for robust internal controls within listed banks that keeps unpublished price-sensitive information confidential, and also emphasized the need for regular reviews by management to detect any lapses. And it's time for an NDTV Profit exclusive. Big developments in the IDBI stake sale saga as Kotak Mahindra Bank makes a strong comeback in the race to acquire a controlling stake. The Uday Kotak-led lender has reignited discussions with government advisors, with due diligence now nearing completion. My colleague Vishwanath Nair brings us exclusive insights straight from his sources. Over to you, Vishwanath.
So the stake sale in IDBI Bank, the race for that is, of course, heating up. The government and LIC are looking to sell about 60.72%, and what sources are telling NDTV Profit is that Kotak Mahindra Bank is back in the race. Now, of course, the expectation was so far that this is going to be a two-person race. Fairfax Financial, which is owned by a Canadian billionaire, as well as Emirates NBD, which is currently scouting for opportunities in India to develop an India franchise. Both these players were likely to submit a bid for IDBI Bank. Kotak Mahindra Bank, of course, had put in a initial interest a couple of years ago. Since then, they've gone quite quiet. And what we're learning is that over the last few weeks, Kotak Mahindra Bank has actively engaged in discussions with the government and the representatives of the government in this IDBI Bank stake sale process. They are, of course, in the middle of a due diligence proceeding that will get over very, very soon. And the expectation is that a bid might come in as early as next quarter. The valuation the government is looking at is valuing IDBI Bank at about $8 to $10 billion. That would mean that a 60.72% stake would be worth anywhere between $5 or $6 billion. That's the expectation that the government has from these three bidders. Of course, whether these three bidders will submit a bid or not, that's something that we'll find out only next quarter. But as of now, Kotak Mahindra Bank is deeply interested in participating in this transaction. Another important news development here is that the government is making making it easier for the bidders to come in. Essentially, it is promising the bidders that it will cap the voting rights for Life Insurance Corporation, which is of course a significant shareholder in IDBI Bank currently. Now, even if the 60.72% stake is sold, government plus LIC, still both these owners will still continue to own close to about 34% stake in IDBI Bank. So it is essential to assure the bidder that the voting rights for LIC will be capped, and that will help the bidder to come in with significantly more control. Remember that for any investor in a bank, currently voting right is capped at 26%. Doesn't matter what your stake in the bank is. So this is an important development as far as IDBI Bank is concerned. Kotak Mahindra Bank back in the race.
Thanks, Vishwanath, for that. Meanwhile, Maruti Suzuki has launched the Victoris, a new mid-size SUV aimed at strengthening its foothold in the competitive mid-SUV segment. The Victoris is the brand's first model to feature Level 2 advanced driver assistance systems, including automatic emergency braking and 6 airbags as standard. It boasts a 5-star Bharat NCAP safety rating and marks a significant expansion of Maruti's Arena SUV lineup. We spoke to Hisashi Takuchi, MD and CEO, for his insights on the Victoris' game-changing features and how he believes that the festive season will boost their sales numbers.
The actually market is static because of the GST issue, but once GST is introduced, new GST rate is introduced, I'm sure that government is pushing strong, and I think automobile market in H2 will show a strong growth after GST reform.
And how does your inventory really look like right now? And how are things on the dealership end? Are there any, do you have a lot of pending deliveries right now, or whether that thing has gone in the past?
The pending bookings is almost normal. And our stock situation, like last month's end, is almost normal. But from now till the start of the new GST rates to be introduced, I think we are going up and prepare for the sales surge. So our stock will go up. But that is for the preparation for the big sales situation, big sales, in the festival season after GST implemented.
Meanwhile, the Cabinet has approved an incentive scheme worth 1,500 crore rupees for critical and rare earth minerals. This scheme will cover recycling of critical minerals like lithium, cobalt and rare earth elements. Let me go across to my colleague Rishabh for more details on this.
Right, a crucial cabinet decision has been made today. The 1,500 crore rupee worth scheme for critical as well as rare earth minerals, an intensive scheme, an incentive scheme has been approved by the cabinet today. Now, this is a part of the National Critical Mission, a National Critical Mineral Mission that was envisioned by the Prime Minister. This is designed as a 6-year package, so incentives worth 1,500 crore rupees will be dispersed across 6 years till FY31. What we're seeing is that the scheme will cover the recycling of various critical as well as rare earth minerals like cobalt, lithium, nickel and other rare earth minerals like gallium as well as indigenium. What we're also picking up is the fact that the expected beneficiaries of this particular scheme are expected to be the large recyclers, but as well as small startups who want to get into the space, given the fact that 1/3 of the layout of this scheme is earmarked for startups. What we're also picking up is the fact that this will provide incentives for the recycling value chain that are involved in actual extraction of critical minerals. This scheme will not be including those that cover only black mass production. So we're seeing a clear focus emerging out of the situation wherein rare earth magnets were banned by China. The export of those rare earth magnets were banned. We saw a trickle-down impact on various industries, especially electric vehicles right here in India. We saw some sort of an impact being felt by consumer electronics makers as well. So a clear step in that direction over diversifying the import sources for critical and rare earth minerals, as well as protecting domestic industries from extraneous shocks like the one we faced with regards to China.
Thanks for that, Rishabh. Moving on, the devastating floods in Punjab have claimed 29 lives so far, with the maximum casualties occurring in the Pathankot district. The floods have also impacted the lives of more than 2.56 lakh people. My colleague Anand Bhatt from NDTV joins us with the NDRF inspectors to provide details on the ongoing rescue operation.
तो इस समय हम गुरदासपुर में मौजूद हैं और रावी नदी के बीचों बीच आ चुके हैं। सुबह से बरसात हो रही थी। आपको बता दें कि सुबह से बरसात हो रही थी और जो हमें जानकारी मिली वो ये कि कल 3 फीट पानी कम हो गया था, लेकिन बरसात होने के कारण 3 फीट पानी आज चढ़ गया है। यानी कि ये फ्लक्चुएशन पानी को लेकर गुरदासपुर में अभी चल रही है। बोट के जरिए दरअसल हम आपको दिखाने की कोशिश कर रहे हैं कि ये इलाका कितनी बड़ी मुसीबत का सामना कर रहा है। रावी नदी है ये, और रावी नदी इस समय समंदर का रूप ले चुकी है। आपको लगेगा ही नहीं कि ये नदी है, ये नदी इस समय समंदर का रूप ले चुकी है। चारों तरफ इस नदी का फैलाव है। मैं अपने कैमरा पर्सन से कहूँगा कि वहाँ का जरा मंजर दिखाएं कि किस तरीके से फसल सब कुछ वहाँ पर डूबी हुई है। और ये जिस गाँव में हम जा रहे हैं, हम आपको बता दें कि हम घनिया का बेट एक गाँव है, धर्मकोट से हम आगे बढ़े हैं और धनिया का बेट एक गांव है। और जो जानकारी हमें मिली है वो ये कि घनिया के बेट में अभी भी कुछ लोग मौजूद हैं। इस गांव से आपको बताएं कि जो रेस्क्यू टीमें हैं, आपदा प्रबंधन से जुड़े जो अधिकारी हैं, टीमें हैं, उन्होंने बहुत सारे लोगों को इवैक्यूएट किया है, लेकिन अब भी वहाँ पर बहुत सारे लोग मौजूद हैं और उन लोगों को जो बाहर आना चाहते हैं उन्हें बाहर निकाला जा रहा है और जो लोग अभी गाँव के अंदर हैं उन तक राहत सामग्री पहुँचाई जा रही है।
Meanwhile, flood fury continues in the northern part of the country and heavy rains are expected to continue in Rajasthan for the next 4 days. The Met Department has issued an orange alert for Jhalawar, Pratapgarh and Baswara areas. Jaipur witnessed heavy rains and waterlogging since the morning. My colleague Vishwas Sharma from NDTV brought us this ground report from Jaipur.
In just 1 hour of rain in Jaipur, on the main road of Jaipur, the Jalen Marg, the flood-like situation has happened, and you can see how the cars are stuck, how the people are stuck on this water clogging. This is the main road of Jaipur. You can see the Albert Hall, the famous Albert Hall on the frame. From that Ramnivas Bagh to this main road of Jaipur, up to 3 to 4 kilometers, the situation is continuously critical due to the water logging. Because of the poor drainage system, the life of Jaipurites is being worse, and this rain is making a big trouble for them. And you can see on this Jalen Marg, one side is Savai Mansingh Hospital, and on the other side, this is the state's biggest children care hospital, the JK Lawn Hospital, and on the entrance is a water logging up to 2 to 3 feet, and you can see whole the footpaths, whole the bus stops are submerged into water.
And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म लेकर के आ रहे हैं दिवाली के अंदर।
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy to India Inc.'s biggest voices, join us as we decode what these reforms mean for businesses, investors and you.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Vaibhav Sanghvi joining us this morning, CEO, ASK Hedge Solutions. Vaibhav, always a pleasure to speak with you. Thank you so much for joining in. GST or tariffs, what's going to be the biggest factor for, or bigger factor for Indian markets?
I think both are equally important, and the reason is basically that GST, of course, will induce good amount of consumption. And while we talk about our GDP configuration, we had investments as a bucket which was firmly in place for the last 10 years in that sense. Whereas this is the post last general election, I think a concerted attempt in terms of reviving the consumption, has been undertaken by a combination of central government, state government, and probably central bank as well. So when you see that the second biggest pillar of your GDP configuration kind of starting to move in is when GDP growth is likely to be better. Now, of course, in the last 2 quarters, we've seen those kind of positive numbers, but I think we will gather more pace as we go ahead. Lastly, from a tariffs perspective, it is equally important, purely because the third component, which is your net exports, is quite dependent on that. And more so from a sentiment perspective as well, it kind of helps from an FPI investments into India as well, which currently we are seeing sizable negative numbers.
Vaibhav, if you had, I'm presuming you have a long short currently per se, but if you had the opportunity to be naked long or naked short right now with a bit of a hedge, which side would you be tilting on? I'm just trying to get a sense of how constructive or how negative you are looking at all that's happening, because there are two very, very powerful and opposing forces at play here, and one is imminently in the next 2 days, which is very constructive.
So Neeraj, great question. Now, the way we are positioned currently is basically we are quite neutralish from a net exposure perspective. And the reason, as you rightly mentioned, is two kind of opposite forces from a market standpoint. Now, while that is the case, what is more important is basically that when you have the ability to do long short, then on one side you can play a hugely positive theme, which is a consumption driven theme. Whereas on the other side, you can also play simultaneously something which is driven by large FPI selling as well. So the pockets of where the ownership of FPI lies is something that might continue to be under pressure for some time. So it gives us some nice opportunity on both the sides while keeping the exposure pretty neutralish.
I'm wondering if you are looking at the GST bit. Let me just focus a little bit on it. Looking at the kind of pop being expected from FMCG staples with a bit of trepidation or a bit of cynicism, because are we really going to see that impact of demand coming in for FMCG staples because of GST cuts, and they will undoubtedly be the biggest beneficiaries? Do you think that will translate?
See, of course, GST is going to benefit from an overall perspective, but I would rather see that it as an incremental big step towards working towards a common goal in terms of inducing consumption. Now, this is not something which is an isolated measure. I mean, if you go back from a year's perspective, you will see that the state welfare schemes plus your central government's income tax benefits, and lastly, from an RBI perspective, decreasing interest rates, along with increasing in terms of the liquidity. And this adds on to those kind of measures, which clearly states that government is in a mood to do whatever it takes to kind of get the consumption basket going. So I would view from that perspective, and I think from the next 12 to 24 months, I do think that it's a great play to kind of be in terms of the portfolio. Lastly, when you talk about FMCG, I think more importantly, it will be that at the same price point, there will be volume growth. So you will see those 5 rupees, 10 rupees kind of package kind of stuff. There, the volume growth will happen rather than price decrease will happen in that sense. So, and that FMCG kind of gets triggered in terms of the positive momentum, looking at good, decent, volume growth. And lastly, from unorganized to organized, also getting much into play is when we see that this basket is likely to move ahead going forward.
Got it. Vaibhav, the second tier beneficiaries have started to make the moves, if you will. So if auto sales are going to happen, we've seen tire companies, presumably because of that, starting to make a move. Select auto anchors have come on the channel and said that they are very constructive on what the demand uptick for autos could mean for them as well. Is there a second order, third order play here because of GST alone? Considering it's going to be such a big move, for lack of a better word, such a big impact move.
No, of course, Neeraj, I think there will be a second order impact as well. And when you talk about auto anchors, which is rightly so, you can kind of segregate the sector between those guys who have larger domestic plays vis-a-vis your exporters, right? So focus on those guys who are domestic oriented. And when you talked about the tire companies as well, I think what has also helped is basically that decrease in terms of the rubber prices also kind of help or aiding them in terms of the raw material input costs as well. So in all perspective, those guys who are focused on two-wheelers and four-wheeler segment and an economical segment in terms of supplying from an auto anchors perspective in the domestic side, you will see a good play going forward, at least in the next 3 to 6 months.
Okay. In terms of autos specifically, Vaibhav, do you think that big boost is going to come because of GST rates? I mean, there's just two streams of thoughts on it. If you do have some segments which have inelastic demand, then GST up or GST down is not going to make too much of a difference. But for maybe lower priced passenger vehicles, for example, will it really give that kind of a boost? Because PV segment has been flailing.
Sure. So I think let's step back and consider what had happened in 2009-10, right? When we had seen at that point in time a stimulus in terms of the decrease in terms of the excise duties. And post that decrease in the excise duties, you had seen the next 2 years or 3 years that the volume growth, was pretty strong. Now, I'm not saying that is the similar kind of volume growth numbers you may see going forward, but I think the direction is pretty clear. These things really help in terms of increasing the demand on an overall perspective, and rightly so, as you rightly mentioned, that the lower denomination kind of PVs or two-wheelers are something you will see the first kind of buoyancy in terms of the demand. So I am looking forward to it, and hopefully in the next 2 years we will see that kind of increase in demand here.
The other thing is just consumption enablers, right? I mean, and what happens? So one is, of course, distribution or logistic companies, and is there a play there? The second is the platform names, right? And independent of what happens on GST, Zomato, we learn, Zomato, which is a part of Eternal now, gone ahead and has hiked platform fees. We've seen Swiggy do that, etc., etc. So are these consumption-related names out there which you might be constructive on?
Yeah, of course, Neeraj, I think the whole platform plays, right? And we've been constructive for some amount of time. The reason is, yes, the government is helping in terms of consumption, but from the business models perspective, I think these are the guys who are grabbing market share in the traditional industries as well. So those guys who, on the power of technology, are continuously grabbing the market shares, plus turning profitable or having the visibility to profitability. My sense is basically they will keep on doing much better than expected going forward as well. So we do view the whole segment very constructively, including your logistics player, including your other platform, restaurants, consumption plays. I think technology here is an enabler for extremely strong market capture.
Okay. And something that we'll keep an eye out for sure. Vaibhav, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.
Hello and welcome to NDTV Profit. You're joining us on this special broadcast where we're actually at the Urban Company IPO press conference. And I'm glad that I have with me Viraj Singhbal, the CEO of the company, and the two co-founders actually, Varun Khaitan, the COO as well. Welcome, gentlemen, to this conversation. Viraj, I will start with you. You guys are entering the listed space. Over the last few years, we've seen a lot of so-called startups. I mean, you all are 15 years old, so can't really call yourself a startup anymore. No, for you, 10 years, but like a lot of companies. Yeah. So I'm just trying to get a sense of entering the main leagues now with the listed space. Right, you're going to be now sort of looked at on a quarter-on-quarter basis. People are going to start asking you questions. A lot of shareholder questions will come your way. How are you seeing this journey from a startup back in 2014 to now becoming a listed firm?
Well, firstly, thank you very much, Vishwanath, for having us. I think it's an important milestone for the company, an important moment, but one that comes with a fair amount of responsibility, and that's not lost on us. In the last decade, we believe we've built a platform that India trusts and relies on for everyday home services. But we are only scratching the surface of the opportunity that's ahead of us. We think this can be a very, very large and profitable company over the next 2-3 decades. And we are committed to building it in the public markets with the highest standards of governance, ethics, and disclosures. So I think while we are excited by the public listing, we recognize that it will come with a lot of expectations, a lot of responsibility. And at our end, we will work very hard to live up to those.
You're going to raise 1,900 crore through this IPO, 472 in terms of fresh issues. You've got 1,428 crore worth of OFS where your existing shareholders are selling. Fairly large funds which are on your cap table. I wanted to understand from both of you. Clearly, this is not a very large fundraise because compared to what other startups have come in. So the goal to enter the listed space is what exactly to your mind?
Well, Vishwanath, as you know that, in FY25, we were a profitable company. We generated 1,144.5 crores of net revenue and about 28 crores of profit before tax. So as such, the overall cash requirements in the business are limited. It's also a cash flow positive business. I think the primary objective of being in the public space is we see it as a natural evolution for a company like ours. I think the first 10 years, were privately held. But I think, the time is opportune today, both in terms of size and scale, as well as growth. We would like to get into the listed market when we still feel that we have years and years of growth ahead of us, and would like to build in the listed space and give the opportunity for retail investors and others to participate in that journey together with us. So I think it's mostly driven by that. Yes, of course, the 472 crores of capital that is a primary issue will go in to building the fundamental building blocks of the company, whether it's technology, brand building, training, and other general corporate expenses. And those will, create a stronger foundation for us for future growth.
Okay. Varun, I want to ask you this question. And, I was looking at the DRHP and the RHP that you put out before this issue. Roughly 6% of your revenue gets spent on technology, if I'm not wrong. Does that materially go up with this fundraise, or is that going to continue in that range?
So, you see, one of the key aspects of our business is that Urban Company is a platform that is built full stack on the back end with service professionals. And technology is embedded in every single aspect of what we do. The consumers book our services entirely through our mobile app and website. The entire system that ensures service professionals reach to customers' homes, deliver high quality services and satisfy their needs, as well as everything on the service professional side runs on their mobile app. So we have a very sizable technology team. We continue to invest in building these technologies looking out into the future. Just like for the platform, we think we are in very early days. Similarly, for the technology that we have, we are still in very early days and trying to build many more evolution-led pieces, whether it is for our services business, for our international business, for our native business, or the new solutions that we are driving in the form of InstaHelp and Revamp. All of these new things will have to be done by more additional investments in technology. So the technology team will continue to be sizable. Investments in cloud infrastructure will only continue to be sizable from here on.
Understood. Looking at your services now, you originally started with home upkeep offerings. You've added beauty and grooming over time. InstaHelp is something native brand of products that you are selling on your own. What is the product push going to look like? Will you stay true to the home focused businesses, or are these new businesses sort of taking a sizable chunk of that revenue and the growth plans?
I would say our focus is to be a home platform. That is the fundamental proposition and vision of the company. We want to be relevant for the consumer's home. Which means home services is obviously the biggest component of that. Any and every service that can be delivered in the four walls of your home, where a trained high quality service professional or a small team of service professionals has to come to your home to deliver that service, that's very much part of our playing field and our long-term ambition. We may not be present in several categories today, but from a long-term perspective, we definitely see all of that business as core. Similarly, as Varun mentioned, the home, at times you go beyond services to home products and solutions, which have a strong synergy with the services business and can help you create a home platform that goes beyond services. Water purifiers is a fantastic example of that, where we started the business 8-10 years back with only servicing and repairing water purifiers. About 5-6 years back, we launched our own private label filters and spare parts business in that category. And about 2.5 years back, we further vertically integrated into our own set of devices. So wherever such opportunities present themselves, where inside the home, we can serve our consumers more deeply, leverage our existing capabilities, whether in terms of technology or the service network or the back-end supply chain that we have built. I think we would want to look at that. We'll also have to be calibrated and measured in terms of new service categories or product categories we launch. I think any new offering that we get into requires investment, requires us to go deeper. So it's always a question of scope versus depth, and one that we are thoughtful about making those trade-offs.
Okay. You've also expanded into international territory, UAE, Singapore. To your mind, is that something that is going to drive a huge part of the business, or is that something that you felt that you needed to be outside of India as well?
Do you want to take that?
Yeah, so we started our international expansion in 2018 and have been very happy with the progress over the last 7 years in 3 markets, in UAE, in Singapore, and in Saudi Arabia, where we actually operate in the form of a JV. All these 3 international markets are doing well. Our UAE business has also recently turned profitable. And we hope for all the 3 businesses to continue to grow and over time turn profitable. When we look at the overall focus of the company, we see the opportunity in India, both for services and more broader home solutions, to be the biggest focus and priority of the company. So growing our India services further and expanding both geographically as well as in terms of offerings in India, that will continue to be the most important priority of the company. International businesses in these 3 countries, we think will continue to thrive and do well.
Okay. Coming to the professional side of the story, right? While I was looking at the complaint versus resolution rate, and we've got a fairly good resolution rate, over 98%. There is also the professionals who end up complaining. I mean, that's something that urban companies face itself, and other companies in the space have all faced those challenges. Especially the conversation around the gig economy taking off is, because companies like yourself have expanded their services quite a bit. Tell us a little bit about how you see your relationship with the professionals that you hire on your platform, who end up delivering the services and become your brand ambassadors as well. How do you see that relationship evolving? Do you think that as a company yourself, you would want to develop something further beyond what the government might be offering to these professionals?
Vishwanath, I think our relationship with our service professionals has been a very, very key part of who we are and the vision statement of the company, which is to deeply empower these professionals to live better, more dignified, respectful lives, and serve customers with dignity. There are 4 pillars of this. The first and foremost is earnings. We are perhaps the only company in the gig economy in India, and to the best of my knowledge globally, that publishes its Service Professional Earnings Index, or the Gig Workers Earnings Index, which net of all costs, commissions, travel costs, product costs, and taxes, highlights the monthly take-home income. And we've been doing this for the last few years. In FY25, the average professional made net of all costs about 26,400 rupees a month, all by working about 83 hours on the platform. People who worked for about 150 hours on the platform in a month, which is about 7 to 8 hours a day if you assume 22 working days, made nearly 50,000 rupees. So earnings and earning opportunities on our platform are very sizable, with hourly earnings going well north of 300 rupees net. We also offer free training and certification to everybody who joins our platform. And they all go through an upskilling program. We've partnered with NSDC for the certification. Every professional also gets access to free life, accidental, and health insurance. There is a life and accidental insurance cover of 10 lakh rupees and a health insurance cover of 1 lakh rupees. And our top performing service professionals get a family health insurance of 2 lakhs free of cost, which covers their spouse and 2 kids. They get access to personal loans and other loans. So, it's what we think this is a journey in formalization. These professionals were unorganized, offline, typically earning, below minimum wage in the offline world, did not have access to social security, to credit, to upskilling programs, and through Urban Company, now they have that opportunity. So we are, I would say, very proud of the work that we've done over the last 10 years to help more than 55,000 professionals become part of middle-class India and for the promise of India to come alive for them. More importantly, this is a very, very important focus area going forward. We will continue to invest behind creating the best earnings opportunities for our professionals, making sure that we go above and beyond what the law mandates in terms of, creating a safety net for them, giving them upskilling programs. We've also done other things, like for our women professionals who are about 40% of our fleet. In the past, we've launched something called Project Nidar, which helps those who suffer from domestic violence deal with them. We've recently launched Project Udan, which focuses on providing two-wheeler mobility solutions to our entire women fleet. So these efforts will continue. Our goal is simple. We believe happy professionals lead to happy consumers. And therefore, it's very important that our professionals are happy and satisfied with the platform for them in turn to satisfy our consumers.
Thank you so much, Abhiraj and Varun, for joining us on this conversation. Pleasure to talk to you guys.
Thank you, Vishwanath.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं दिवाली के अंदर.
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy to India Inc.'s biggest voices, join us as we decode what these reforms mean for businesses, investors, and you.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
The markets move fast.
And so,
On the 6th of August, when US President Donald Trump slapped India with an additional 25% tariff, taking the whole tariff amount to 50% higher than most nations, the question that was being asked was, what will India do to respond? And amongst all the clamor, some of the voices were advising and urging the government to act. The theory was, let's strengthen ourselves. Let's make ourselves more resilient to external shocks like tariffs in uncertain times. Well, less than a month later, less than a month after that 50% tariff was hit, we are set for one of the biggest reforms in recent days. As the GST Council meeting will take place, it could have a huge booster for the economy. This is truly a game-changing reform. Now, what does it mean for the economy? That's what we're going to talk about in this special show today. And we're getting you the data for that. Remember, it's a plus and a minus. Obviously, when GST rates are cut, and you will cut from 4 rates to 2 rates, the government will lose revenue. Remember, we trend to close to 1.6 to 1.8 lakh crore rupees on average a month from GST revenue. Obviously, we lose that revenue. That's the fiscal cost over here. But on the other hand, you're going to boost consumption. If things get cheaper, people will buy more. What does that do to the economy? So we've tried to break down the math for you, that where it all settles. So this is what Citi is saying, for example. The fiscal cost is at 1.1 to 1.2%, lakh crores, that is 0.25 to 0.3% of GDP. For Antique, they say 0.3 to 0.4% of GDP. MK says 0.4, UBS says 0.3. IIFL says 0.4. So on an average, say at the higher end, 0.4% of the GDP would be the impact. For a Kotak Securities and an Axis, it's slightly higher. Kotak Securities say it'll be 0.5 to 0.7% of the GDP. But what does it do to GDP growth is what you should also look like. And a lot of estimates talk about a boost to GDP. Now, this is what we are hoping to see. For Nomura, you could see plus 0.46%. For BOFA, you could see plus 30 basis points. For Ambit, you could see 20 to 50 basis points. So on balance, you might expect a positive. Now, that's the math. The question is, why is this important? Well, number one, it's certainly the most important reform in the last several years. It also looks like something that will give a huge spike to consumption, which is being underestimated at this point. GST could, in balance, trump the tariff attack, and this is something that India needs right now. What's going to be even more crucial than the rates coming in is a simplification of the input tax credit, inverted duty structure, all of the pain that smaller businesses have in actually adhering to GST norms. If that is taken away, the multiplier effect could even be larger than reducing to 2 tax rates. But we're going to be talking about all of that with our experts right now. We have with us Kaushik Das, Chief Economist, India and South Asia, Deutsche Bank. Pranjul Bhandari joining in, Chief India and Indonesia Economist, HSBC. Sameer Chakravarti, Chief Economist, India, Citibank with us. Welcome to all of you and thank you so much for speaking with us. Pranjul, I'm going to start with you first. And you know, we're trying to do a little mental math here. If you look at the tax incidence versus the GDP consumption boost, does it even out in your view?
Yeah, thank you very much for having me. So, of course, this is something we're all looking forward to. It's always nice to have a tax cut, especially in the run up to a festival. It makes you buy a lot of things. It's great for sentiments. I think something which the Indian economy and Indian markets need right now. So, I would say that's a positive. The second positive is if this actually cleans up the structure a little bit, having lower number of rates, making it more predictable, then I think that can have a lot of ease of doing business benefits as well. So, there are a lot of pros. But at the same time, I think there are deep uncertainties out there which we should be mindful of before we put like lots of number out there that, growth could be higher by so much or not. And I think I just want to touch upon a few uncertainties. I think the number one uncertainty is what is going to be the net revenue loss coming out of the GST tax cuts? Now, if there's a net revenue loss, it means that the government is losing money, but the consumer is benefiting because on the whole, the consumer is not having to give that much of tax. But then the government is going to have to figure out how they share it between the center and the state. So I think sort of that is one part. On the other hand, if there is no revenue loss, tax cuts in one place are compensated by tax hikes elsewhere, then you will have to really question how much does the consumer really benefit. And although at that point, the government might be happy that they don't sort of lose revenues. What I'm trying to say is that there is no free lunch here. Somebody benefits and somebody loses. And I think we have to be very mindful of that at this point of time. One other point is that the manufacturers who benefit a lot from these tax cuts, will they use it to increase their own profitability? Or will they pass it on to consumers as reduction in final prices? That again will determine how much consumers benefit, how much inflation comes down by. And in the past, we have seen in many sectors, producers don't really pass through all of these benefits. So these are all the different things out there. But my general sense is, and I'll agree with a lot of the estimates which people have shown us, that there could be a growth benefit between 0.2 to 0.4% of GDP or 0.2 to 0.4 percentage points on GDP growth.
Yeah. In fact, Samiran, I believe you have a slightly higher growth benefit number as opposed to the tax incidence. I'm going to start with the numbers and then get into the semantics of what will actually happen. But let's just get those numbers out there, because at the end of the day, it is going to be a tax revenue foregone, and the amount of boost to consumption is something we can only estimate right now. Samiran, your take?
So it's actually quite simple at a theoretical level to understand this, that money in the hands of the government is also spent, money in the hands of the consumer is also spent. But which has a higher multiplier effect is what we are debating about. When the government is doing a GST tax cut, the implicit assumption is that the multiplier arising out of the households spending the money will be more than the multiplier that would have come from the government spending the money. And how is this multiplier determined for households? Very simply put, out of this tax benefit, how much will be saved versus how much will be consumed by the households. At this point of time, this is a function of how confident the households are with respect to savings versus spending. These are difficult numbers to estimate at any point of time. But yes, we are hopeful that because this GST cut is coming on the back of other kind of stimulus, starting with the income tax cut, 100 basis point of rate cut from the RBI.
Suffice to say, Samiran is slightly more optimistic. Kaushik, what are the numbers that you have back of the envelope?
Yeah, Tamanna, it's easy to make these estimates on paper, but you should realize that we need more information from the government on what are the exact items which will go in which bracket, and after making those adjustments. Also, you need to factor in how people will behave. Obviously, people can wait till the GST rationalization takes place. So for all you know, September, a lot of people who would have bought things in advance probably could delay their purchase till the actual rate cuts happen on the GST front. So there are different dynamic, but the way to think of it is this is the next generation GST reform. This was overdue for some time. We needed to rationalize the rates and bring the multiplicity of rates to a smaller number of rates, which the government has done. So you need to think of it more from a 2 to 3 year, 5 year perspective. Is this good for the economy? The answer is yes, because this gives more money at the hands of people whom, people can decide how much they want to spend. So what could happen is that, people could delay their spending a bit till the GST rationalization takes place. But, in the next year, you could expect more consumption coming out of this lower GST tax net. Now, the issue is, could this have been done earlier? Yes, probably that this could have been done earlier, but this is coming as a response to the 50% tariff that we have from the US, and probably that will also come down over a period of time. But for the time being, we are stuck with this 50% tariff. So that will, on the balance, obviously be negative for growth. So if you do the plus minuses, probably the 6.5% growth forecast that we have for this year and next year as well, that India will manage comfortably. We already got a good GDP print in April, June. Those numbers are strong. So overall, I think the GDP should give more money in the hands of people, and you should get 6.5% growth.
I don't envy economists right now, because the amount of permutations and combinations you have to keep in mind before getting to your next GDP projections is going to be excruciating. We don't know if 50% is going to become 25% by November. We don't know what all of the other factors are going to be. Pranjul, but net, would it be safe to say that the consumption boost is very clear and it will be revenue accretive for most companies?
I think the consumption boost is clear, and I'm going to agree with Samiran here that it's not just the GST tax cut, it's a lot of other things that are coming together. The income tax cuts that happen in the budget, the fact that interest rates by the RBI have been cut a lot. So a lot of the household interest burden has fallen off. The GST tax cuts are happening now. Perhaps in the next 12 to 18 months, we'll see some 8th pay commission money flowing in as well. So I think all of that adds up. And my sense is that is sort of like the consumption boost that I'm talking about. I also want to take a step back, and I want to say that I think there were already in the start of the year, we were seeing parts of consumption doing better than a lot of people actually give credit for at this point of time. With oil prices being so low, with inflation being so low right now, my sense is that the purchasing power of the informal sector, which is the masses, had actually been improving over the last couple of months. And that is one of the reasons that the GDP number that we got for the June quarter, 7.8%. I know there are a lot of issues around it in terms of deflator, but even if you clean that number up, my sense is it did show growth was not as bad as a lot of people had feared. And I think what this was really picking up was the fact that the informal sector, the masses, I think are doing better this year than they were doing last year. So we have all of that on one hand, and then we have all of the policy measures like tax cuts, both direct tax and also the GST. I think all of this together makes up that consumption story that I think we should be looking forward to.
So then what is the bugbear that we need to keep in mind as we roll this out? Samiran, in your view, what is the biggest challenge? Because GST has always been something great on paper, but has taken time to roll out and smooth out the rough edges. What would you like to see as a very clear mission statement in the outcome of this meeting, which we'll see in the next couple of days?
So obviously, as all of us are saying, that a GST cut is not just a measure to boost consumption, but it also a measure as a longer-term structural reforms in furthering the ease of doing business. So I think that component of the GST restructuring should be at the forefront, because you were talking about the bugbear part of it. The bugbear is, or the question that is there is that, is this going to be a one-time spurt in consumption, or is this going to be a permanent structural increase in consumption over time? Because there is a possibility that people are deferring some consumption right now, and the moment the GST cut happens, a lot of consumption happens at that point, but then we get back to the old trend of consumption also. So that is one part that we need to see. The other is that how is the consumer sentiment right now? Because consumer sentiment is a function of many different things, including how the consumer is feeling about the wealth effect. If the wealth effect is not strong enough, then some part of this GST cut could get just saved rather than being spent. I think these are the two things that from a multiplier effect perspective of this GST cut that needs to be seen, and associated with is the more structural ease of doing business part of it. If these two things fall in place, then this will be really a game-changing announcement.
I think the other part of it is what happens to state finances, because this is also going to come in lieu of compensation cess. Do you think that more clarity is needed there? And I'm going to take that question first to Kaushik.
Yeah, I mean, we'll get more information on all this in the next 2 days, and how the government wants to, kind of distribute, the finances that go to the state. Different states will have different demand. So I think, we made this calculation, and as you showed in your opening remarks, the kind of fiscal revenue loss that can come because of this. For this fiscal year, I think the number would be around 400 to 500 billion INR, which I think can be, kind of financed through the, GST compensation cess, at least half of it. And then, the rest, the government can use T-bills to finance it. So it's not that big a fiscal shock as market is fearing it out to be. And I think the fiscal deficit that the government for the center has projected at 4.4% of GDP, that will more or less remain intact. We have a number slightly higher, 4.50, just to round it off. But we don't see much fiscal risk this year at least. And, the compensation cess will go away by the end of this year. Instead of that 28%, some of the items will go to 40%. You could have increased consumption, not maybe immediately, but after the GST is announced, over the next few quarters, you could have increased consumption, which can make up for some of the losses in revenue. And, if you have to give to the states, they can work out a solution. Details will wait, how they want to, kind of finance it. But I don't think, it'll be such a big problem that the fiscal consolidation that we have seen both for the center and the states over a period of time, that completely reverses, and India, is concerned about the fiscal outlook. The bond markets have reacted in a negative way. But I think if you go through the numbers carefully, the central government, I think, will manage the fiscal deficit at 4.5%. And states' fiscal deficit also would remain below 3% of GDP, which they have been keeping for the last few years. But the center will make it a point to ensure that the states do not lose the revenues in a way, and they'll plan it. We'll get the details. It's difficult to speculate at this point of time what arrangement they will have. But this 28% going up to 40% for some of the items, I think, can offset some of the concerns that are there without knowing exactly how the calculation will look immediately. We'll get more information in the next 2 days.
No, agreed. The question also is, where is the inherent consumption appetite, and does it exist to that extent? For autos, for example. Pranjul, let me come to you on that. With passenger vehicle numbers that we're seeing month on month now, there has been a downtick, there has been a pain. Now, my question is that will a consumer go out and decide to buy a car versus not buying a car, or buy a more expensive car because there is a GST cut? Is that what was keeping the consumer back?
That's a very good question. The truth is that when we think about what really drives consumption, like over a year properly, and we try to actually maybe model it in a particular way, our sense is things like a tax cut or interest rate cuts, they sort of play a secondary role. I think the primary role is all about wage growth, about the sort of the job you have, is it paying you enough, your real wages rising. I think that is sort of the main driver. So, you could be in a situation where you get a big tax cut, but you're not confident about your wages, your salaries, sentiments are not that great, and you end up saving this tax bounty rather than actually going and spending it. So I think these are some of the questions out there which are still not answered. And my sense is that eventually, if we want to talk about long-term growth in consumption, long-term growth in GDP, and all of that, I think we have to look beyond, a few GST tax rate cuts, and we have to think about important reforms. Now, from that perspective, the cleanup in the GST system is an important reform, but we still don't know where it will go. We still don't know how many rates we will eventually end up with. We don't know how, a lot of the ad hoc, put one item here, one item there, removing it, how we will get away from that regime, because that creates a lot of uncertainties in the minds of manufacturers and investors. So we'll have to see how the underlying GST reforms really pan out for the longer term benefit. The short term benefit, which is just the tax cut, I think that will only have a marginal impact for the next couple of months.
Yeah, so I agree with you completely, and this is something that I said when we opened the show as well, that cleaning up the pipeline of GST is perhaps more important than what the tax cut is or what the rate is from a business perspective. But from a consumer perspective, Samir, I just want to get your sense in that, and that similar to the question that I asked Pranjul, is that inherent appetite there which can be flamed with a GST cut, or is there a bigger problem there that we're not yet seeing?
So, Tamanna, in economics, everything is ceteris paribus, everything else remaining constant. So, when we have to analyze this impact of GST cut on consumption, we have to assume that this is happening on top of whatever the current situation is. And if we think that on top of the current situation, the GST cut will have zero impact on consumption, then we can all go back home. There is no role for policy at all. Because you can't change suddenly the employment or wage growth dynamics without a policy intervention like a GST cut. The expectation is that the GST cut is that catalyst which will drive some incremental consumption, which will start that positive cycle. That incremental consumption will probably lead to incremental investment, will lead to incremental employment and higher wages. That's how the cycle is kick-started. That's where this GST cut is important to get out of this sort of a doomsday type of predictions that people are having, that India's growth is stalled because of lack of employment and lack of wages. So in my book, this is the correct way to do things. Whether this will have X impact or Y impact, as I was saying, it depends on multiple things, how that multiplier will play out. But I can't see how this will have zero impact on consumption. That simply doesn't gel well with what my thinking is.
Okay, surely. What is it that you would like to see? Let's wrap up by saying that what is the wish list that you would like to see at the end of this meet and being announced? Kaushik Das, let me start with you.
Yeah, so I mean, it's already been made clear that there will be two rates, and you want that simplicity to come through, and you would want most of the states to agree and be on the same page so that things do not get delayed. So the idea is to get this rolling before Diwali and by the first week of October, at least with the Dussehra time. So the states will have to agree, and so they should not come in the way of delaying this. So I would like to hear that the states are agreeing in principle and then just putting the logistics in place so that we can get it going, because the faster you do it, the faster people will be able to take their decision to buy the products with a lower price. If it gets delayed, you're going to defer your consumption. But the bigger point is, if you think from beginning of the year, from the tax cuts, what Samiran was mentioning, the amount of rate cuts that RBI has done, the liquidity that RBI has given, the macroprudential norms that have been reversed. So it's not just GST cut in isolation. A lot of things have been done to boost domestic demand. So I don't see any reason why consumption will not pick up. And the whole idea of doing all this is to boost consumption and make sure that GDP growth doesn't fall just because of the tariff impact. So it could be coming a few months later if GST is getting implemented by October. But I think these are very good steps, and these are the second generation reforms that India need to ensure that consumption is strong. At the end of the day, consumption is close to 57% of GDP, and if you can get that, that's correct. I think India will not have a problem to have growth between 6.5% to 7%.
Frankly, if you think of it as strategy, it's quite clever. We are a consumption-led society. We've been trying to improve our exports for years, but we are a consumption-led society. So we were relatively shielded with this tariff attack, which went across the world. And I don't think anyone believes 50% is going to last too long. Pranjul, a scenario where you have an efficient GST flow, rationalized rates, plus your tariffs start cooling down because common sense prevails. What does that look like?
Well, that looks wonderful, right? As in a way, I think a lot of us who have not marked down our GDP growth forecast sharply are just, hoping that, that day comes. And some comments that we've seen from the Commerce Minister overnight, still brings the hope that we will have a trade deal with the US and hopefully lower tariffs in the next couple of months. So I think that would be the good scenario. But, Tamanna, I'll go back to your question, which you asked Kaushik, that what is sort of your one wish list as we enter this GST meeting? And I would basically say here, and I'm going to have a slightly medium-term lens here, that states should come out not feeling too insecure about their revenues. I think it's important for state governments to feel secure that they will have enough revenues over time, because this security over time helps them improve their quality of expenditure. I think one thing we've seen over the last 5-6 years is state governments doing a little more capex than they were doing in the past. And I think that can go a long way into supporting India's medium-term GDP growth, get better jobs, and all of that. But they will only start doing all of these kind of expenditure on capex if they are secure about their revenue base. Because as soon as they get insecure about revenue, capex is the first thing they cut. And we need capex for long-term growth. So I hope states come out feeling a little secure.
That becomes very, very important. Last, word to you, Samiran. As we wrap up, one thing that you'd really like to hear, apart from what we already know, that there will be 2 rates and then we'll figure out which item is where, but the one messaging that you'd like to hear out of this meeting.
Before I answer your question directly, I think one point that none of us mentioned about this GST cut is very important, that GST being an indirect tax is regressive in nature. So cutting GST is actually going to help a whole swathe of almost everyone in the population, unlike an income tax cut. So from that perspective also, this was a very required measure. What I would like to see is that lesser number of categorization within the GST. Right now, we have too many of such things. If it is priced more than X or priced more than Y, then the tax rate changes. These kind of classifications make it still very complicated. So although we might have currently about only 5 rates, but these classifications might imply that we have many, many such rates in effect. So once we reduce that, that is coming closer to the so-called uniform GST structure, which we aspire to become at some point of time.
So cleaner, simpler, and truly the good and simple tax. This GST power up couldn't have come at a better time. Thank you so much to all of you for joining us, and to our viewers. We're going to be on top of this story. It's truly the biggest mover in recent times for the economy, for the markets, and can be perhaps the one factor that can trump tariffs.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं दिवाली के अंदर.
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy to India Inc.'s biggest voices, join us as we decode what these reforms mean for businesses, investors, and you.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Sometimes it helps to hear from the people that manage your money. And I have the privilege to speak to quite a few of them, and through me, hopefully you get insight. Today, on a day which is of particular significance for the Indian economy, when the GST Council is meeting to debate what could be the most important reform for indirect tax in the recent history, I'm speaking with Mihir Vora, who's a CIO of Trust Mutual Fund. Mihir, thanks so much for taking the time. And we at this juncture do not know what the GST Council is going to agree on and is going to ratify. But directionally, it seems like the move is to simplify the tax regime, and as a result of that is expected to bolster domestic consumption, even though there could be a little bit of revenue loss. In the context of this global trade turmoil, how do you read everything that is happening? Then we'll delve a little deeper into some of these elements.
Sure. Hi, Alex. Always a pleasure being on your show. I think the whole movement towards making things a bit easier for consumption, encouraging domestic consumption, has started, I think, a few quarters ago, at least 3 to 4 quarters ago. And that's not out of choice, but I think it was a serious realization at the government level that there is a problem with consumption, both urban and rural. Earlier, rural was slowing down, and it was slow post-COVID for a long period of time. But in the last few quarters, we also saw significant impact on urban consumption also playing out. And other anecdotal evidences which overall pointed to a bit of stress was the stress in the personal loan segment, the credit card segment, and RBI clamping down on unsecured loans, etc. So there was a clear understanding, I think, at the government level, though may not be officially stated, that there is a problem with consumption. So the first step that we saw towards that was in the union budget that was presented in January, February, where we saw significant tax cuts for the taxpayers. That, as we know, has realized almost 1 to 1.5 lakh crores of tax benefits for consumption. I think while it has a salutary impact, and I'm sure we'll see that panning out, probably the acknowledgement is that it's still not enough, especially given the uncertainties regarding global trade and the US tariffs, etc. So I think the government has realized the severity of the problem, And given the overhang of the tariff, negotiations being long drawn, we need to kickstart the economy even more at this point in time. And that's the reason why you saw the government announcing significant or potentially significant tax cuts. We don't know the final details, but potentially significant GST cuts for consumption across at least the lower income categories and the lower consumption items. So I think whatever is in our control as far as the global situation is concerned, taxes, direct and indirect taxes, GST, the government is trying to do. On the other hand, we also see the government and the RBI talking about enough liquidity, lowering interest rates. So everything that is needed to spur consumption is being done. Government spending on infrastructure and investments was anyway continuing, but this is an additional, stimulus, so to say, that the economy needs.
Okay. It's interesting that you say whatever is in the government's control they are doing, because there are some things seemingly that are out of everybody's control, and that is on the external front. Nobody had anticipated about 4 months back or 3 months back that things would turn to this point, where initially where we were talking about a situation where India might just get preferential treatment because of the bonhomie between Donald Trump and Prime Minister Narendra Modi. Things have gone the other way, and seemingly it's India holding steadfast amidst bullying by certain individuals and certain entities. So you don't have control over that. The question that I think a lot of investors have, Mihir, is whether everything that is being announced on the domestic front can set off whatever might just be the impact, and there will be impact on the jobs front, on small sector, on small companies that are export oriented. Can it be a set off though?
It's very difficult to say whether it will completely set off the impact because of 50% tariffs. First of all, there are so many moving parts. It's not even necessary or wise to take a guess of what the final outcome is going to be. First of all, we don't know how long the tariffs are going to last. Second is we don't know which sectors are going to be included or excluded from the tariffs. Third is that within that we don't know how many incentives or other extra measures the government can give to divert production away to other countries apart from the US. And of course, then you have this big stimulus on the local consumption side. So I think there are so many moving parts, but my guess is that even this stimulus may not be enough if at all 50% sticks. Then it may not be enough, but at least it will be a significant counter to that.
Okay, fair point. And of course, what you're saying is absolutely right, because the Supreme Court in the United States is going to hear the case, and there's no guarantee that it gets through and tariffs are held as valid, because that ultimately is being challenged in the highest court of the United States. Now, let's come to a few more details, right? Because directionally what we've seen is that gold and silver prices are up. So precious metals are up. I think that also holds in a situation where the US Fed directionally might be cutting rates, so yields might come off eventually over there. So that's positive for gold prices, and silver also has played catch up to a certain extent. And there is uncertainty. So on the one hand, you have precious metals that are performing in a certain way. You have a question mark about how risk assets are going to work, and particularly in India. And you have foreign institutions that have been selling India. You have an underperformance versus several global peers. I wonder how you're positioning your portfolio strategy right now.
Sure. So our portfolio is very, very domestic oriented. So the segments like consumption, government spending, defense, railways, etc., where we have seen extra focus on by the government, plus the PLI linked sectors where there's a huge focus on Make in India, Atmanirbharta. So all those segments which are getting or likely to get support from the government, both in investments as well as in consumption, we are positive on. And that to some extent also includes NBFCs and banks, because they will be supporting that consumption or investment, so to say. And we are structurally underweight on global sectors like commodities, energy, IT, etc., except pharmaceuticals, where of course it is a significantly global sector, but it is out of the tariff ambit, and there are some interesting stocks out there.
We're speaking ahead of the release of your next fact sheet at the start of September. I've only looked at the previous fact sheet for the month of July. But and I'm not asking you to go into the nitty-gritties of per stock basis, but any major shifts that you've done in strategy over the course of last month? Because there have been, let's face it, quite a few developments that have taken place.
Sure. So the most significant move would be, while we are already overweight on consumption, we have increased some of the names in consumer discretionary, including some of the, I would say the new age companies which are catering to discretionary consumption. That's one of the significant changes. Plus, we have also increased exposure to auto and auto ancillaries, again based on the consumption theme.
Okay. Now for those people, and we've spoken about this in the past, Mihir, but I'm not going to assume that everybody has watched our past interactions. So for those people that are unfamiliar with the strategy that you normally follow, and you famously had the gorilla analogy for the stocks that you pick, can you explain to these people who are watching our interaction for the first time how you go out and pick your stocks?
Certainly. So by heart, or at the core of our philosophy, we are growth investors. And while we talk about growth, we don't necessarily look at only the medium term, which is the 1 to 3 years growth prospects of a company, but we try to figure out what the length of the high growth phase of a company is likely to be. Because what we have seen is that in high growth stocks and sectors, especially in countries like India, where there are so many emerging stocks and sectors coming up every few years, that optically they look very expensive based on the next 2 to 3 years of earnings. But if you project the growth path to be a 10 or 15-year kind of a growth path, growing at say 15 to 20% or even more in some cases, then a lot of the valuation of the company is determined by the length of the runway of growth, not the next few years of growth. This is what we call finding the terminal value of a stock, or trying to figure out what the longer term valuation of the stock is likely to be. And that's what our core philosophy is. We call it terminal value investing, which basically tries to figure out the length of the runway of growth, in which case almost 70, 80, 90% of the valuation can come from profits beyond the next 5 to 10 years. It can come from the longer term profits. And that's what we have said. That's when profits compound for a long period of time. That's where you get the multi-baggers. Even though at the initial stage in the next few years, it may look optically expensive on a pure PE ratio, but then the earnings catch up and you get the compounding benefits.
Okay. So in that context, with you having explained just now how you go out and pick the stocks, how do you see the current scenario? Because we're done with the first quarter, and it's not necessarily the worst performance. In fact, there were some companies that actually posted better than expected numbers, but it's not the best performance either. So what would you expect given what we know right now? There is going to be a little bit of disruption, Mihir, on account of this transition to possibly a new rate structure, with consumer durable companies, maybe even automotive companies likely to face a bit of an issue on the inventory side. I don't know how that's going to be shared between the distributors and the manufacturers, and what form and fashion that will take. So what do you think about earnings in the near term? And by near term, I mean in this current financial year.
So I think the broad large cap earnings growth will probably be high single digit. It won't be that exciting. Even if you look at the recent trends, the mid cap and small cap segments have thrown up some good positive numbers, good positive surprises in terms of growth. In fact, the mid cap index earnings growth is significantly higher than the large cap index growth, while the small cap index is at an aggregate level, a little below the mid cap index, but then you have too many stocks. So then the selection of stocks becomes more important rather than looking at the index aggregates. It's easier to look at index aggregates in the large cap and mid cap space because you only have 100 and 150 stocks in that space. But the tail in the small cap is very large to choose to do stock picking from. So I think as far as the portfolio is concerned, since we run a flexi cap and a multi cap strategy, and of course we have a small cap strategy where the stock picking becomes more important. But in the multi cap and flexi cap strategy, our biases would be still to be more oriented on the mid cap and small cap space, because that's where we still find pockets of earnings growth.
Okay. The last point, and this is kind of going to give your investor and a prospective investor also, Mihir, a sense of your own thought process heading into the festive season, which I think a lot of people have pegged their hopes on, especially if the introduction of this new GST structure kicks in at the start of Navratri, as several people are anticipating, and there is a bolstering of consumption heading into the festive season and towards the second half of the financial year. Are you, one, excited, two, cautiously optimistic, three, cautious?
I'd say I'm cautiously optimistic because we are all more or less betting on a second half recovery for the economy as well as the markets. So it always helps to stay optimistic, and especially given the fact that we have enough support of domestic flows in the stock market. So I think flows continuing and a little bit of positive surprise can be a decent trigger for the market. Considering that we haven't done much at the headline level for the last 12 months, if you see the returns of the indices, they've been flattish for the last 12 months. So we have seen a time correction, we have seen a price correction. And if the second half does deliver a little bit of positive surprise, then I think we are well on the way to a normal market return kind of a situation. So I would say I'm cautiously optimistic. I think the GST announcement is the big event. Festive season anyway, there's a seasonality around it, so that's fine. But I think the way government times and executes the GST reforms is going to be very important. But of course, the bigger trigger for the market will come from the resolution of the tariff issue with the US, which I hope happens sooner rather than later.
Yeah, absolutely. You said it. Thanks so much, Mihir, as always, for taking the time, and pleasure speaking with you.
Always a pleasure. Thank you.
All right. Now, one of the major financial goals that people have without even realizing it is the need to travel and see new places, the need to take a vacation. And well, it can be as simple as going to a neighboring location. For people in Mumbai, it can be like going to Lonavala or Mahabaleshwar, or it could be like going to Europe or going even further to South America or maybe even North America. And how do you plan that is the question. A lot of people tend to do this in an arbitrary fashion, but is it possible for you to set this to a goal and to a plan, and for you to save on an ongoing basis towards this goal? I'm joined today by Dilshad Bilamoria, who's the Managing Director and Chief Financial Planner of Dilshad Consultants Private Limited. Thanks so much, Dilshad, for taking the time. So the first question to you, is it possible to save for this on an ongoing basis?
Yeah, absolutely, Alex. And, everyone would want to travel overseas. And I think if with a little bit of planning and discipline and systematic investment, I think one can reach whatever goal they may want to. So yes, it's possible.
So it's possible. Let's discuss how. But before we do, would you agree that most people spend on an arbitrary basis whenever they do plan for travel, and particularly because they're not really certain about where they're going to go next, right? One year you might just go to Thailand, or you might go to Kerala or to the Maldives, but you don't know where you're going to go the next year. You could well just go to Rajasthan.
Yeah, absolutely. So I think the important thing is that if someone uses a domestic domestic goal for vacation, the benefit is that the accumulated corpus would increase for the next year, and they can use that for an international vacation. So they could keep changing the destination, but the idea is that, say somebody is very fixed on, say I want to travel to Europe in the next 5 years, and today's cost is say 6 lakhs. So what do I need to do to achieve this?
Okay. So let's start with that, right? Assuming that we're talking about two people and you're talking about a relatively expensive holiday. Let's face it, not everybody can spend 6 lakhs of rupees in any given year, right? So how do you save towards that?
Yeah. So let's take an example of a couple, two people who, say today's cost of overseas travel to Europe is 6 lakhs. So, and we are in 2025. So by the time in 2030, the first year's cost is going to be about 8.4 lakhs. Now, assuming this couple wants to travel every year to Europe from 2030, 10 years hence, so till about 2039. Therefore, if they were to do a regular systematic investment plan towards achieving this corpus, The accumulated net present value of this corpus is about 68 lakhs. And therefore, if they have today 68 lakhs, then they are set to travel, for the next 10 years after 2030. But assuming they set aside a monthly SIP, that's about 82,000 a month that they need to set aside on a monthly basis. Well, Alex, there is an interesting twist to this. So if I may, I can even share the step-up SIP concept.
Got it. Okay. So therefore, let's also talk about that because ultimately, as you grow in your career and your income earning potential goes up, the canvas and the atlas, shall we say, also opens up to you. Your options become wider. So therefore, how do you use that higher income and earning potential?
Right. So absolutely. I think the power of compounding is what is actually shown, demonstrated very well in this. Now, say, for example, I start with an SIP of 2,000, like I said, in year 2025, and then I increase that by, just 15% per year. Right. So my next year's SIP is going to be 94,300, and then it goes to 1,08,000, and then it goes to 1,24,000 and 1,43,000, and this is monthly SIP outflow. Now, assuming a growth rate of 15% to achieve my initial target of 68 lakhs, I would be able to achieve it in 3 years, just 3 years, Alex, and not 5 years. Which means because of my, increased or step up SIP that I'm doing, I'm actually able to reach a corpus about 71 lakhs in 2027. So either I, reduce my expense, or I increase my SIP, or I choose a destination that is fancier than what it is currently. And even if I were to take the conservative average growth rate of the index over the last, 15, 20 years, that growth rate is at about 12%. Now, even with that growth rate of 12% and assuming I step up the SIP, I'm still able to achieve this goal in 3 years with a corpus of about 62 lakhs. And therefore, this is the power of compounding, and this is the power of step up SIP that works even better compared to a normal one-time SIP.
But these are large amounts that we're talking about, right? So what do we assume for the amount of monthly SIP?
Right. So in the illustration, 82,000 is the monthly SIP per month, and this is because we took a initial 6 lakhs kind of destination cost of Europe for 2 people. Now, if you were to break that down to one person, then it's going to be halving everything, right? You need to just accumulate roughly about 38 to 40 lakhs in a matter of over, which will be your net present value over 10 years. And your SIP outflow will reduce. So instead of 82, you do an SIP of about 40,000 a month, and you keep increasing that by 15% growth rate. And assuming the markets grow at 15%, again, you will be able to achieve your corpus much faster.
Okay, now it must be said that these numbers, when you put them on an Excel sheet, particularly, they look really. Sometimes they look scary. Sometimes they look amazing. When you're seeing your money compound, and you say that in just a handful of years you're reaching 60 plus lakh rupees, it sounds incredible, right? But let's also face it.
Big breaking news coming in right now. The day one of the 56th GST Council has concluded the meeting. This is the news that we're getting in right now. They've approved all proposals put forward by the centre. No decision has been taken as yet on the additional levy. The council, however, has agreed to implement the new GST rates by September the 22nd, confirming the NDTV Profit news break brought to you by my colleague Shrimi Chaudhary. We'll be patching on her on in just a moment. This major reform rationalizes tax slabs to just 2 rates. We're looking at 5% and 18%, aimed at simplifying the tax structure and benefiting consumers on essentials like and electronics. We're also getting in the news that the total revenue loss due to these rate changes is estimated at around 48,000 crore annually. But let's remember, viewers, this move marks one of the biggest GST overhauls since its 2017 rollout and sets the stage for smoother compliance and a consumption boost ahead of the festive season. We're going to get in my colleague Rishabh and Shrimi in just a moment. They've been tracking the story very, very closely since the news first broke. And today, from outside the Sushma Swaraj Bhavan, where this GST Council meeting was in fact taking place. And this is what we know so far after this very, very crucial meeting, day one of this meeting. All of the proposals put forward by the centre have been approved. This is a big one. No decision taken on the additional levy. The council has also agreed to implement new GST rates as early as September 22nd. The Prime Minister, if you remember, in his speech earlier had said that this was the Diwali gift that India would be getting. This major reform now rationalizes tax slabs to just 2 rates. We're looking at 5%, we're looking at 18%. All of this aimed at simplifying the tax structure and, of course, benefiting consumers. We're going to get in a word from my colleagues Rishabh Bhatnagar and Shrimi Chaudhary in just a moment. They've been tracking all of the movements, bringing us update since the morning. This very long marathon meeting taking place in New Delhi of the GST Council. We're looking at least 10 hours, but this is the latest that's coming from this meeting. Let's remember there's another one taking place tomorrow. They have approved all of the proposals that have been put forward by the centre, but no decision has been taken just as yet on the additional levy. This move, like we have been saying, marking one of the biggest GST overhauls since its 2017 rollout, and also setting the stage for what hopes to be smoother compliance and a consumption boost ahead of the festive season. So this is the update that we're getting in at the moment. We'll continue tracking all of the developments. The GST Council meeting is actually going to also be taking place tomorrow. What we saw on the agenda today was discussing one of the biggest tax overhauls since the GST regime, remember, was rolled out. The meeting, let's remember, was chaired by Union Finance Minister Nirmala Sitharaman, attended by finance ministers from all states and union territories. We saw a little bit of pushback from some of the states. We also saw some senior officials from the centre attend this meeting. Decisions, remember, in this particular council need to be taken either by consensus or weighted voting. Okay, but we're also getting in the news at this point of time. There is no GST Council meeting tomorrow. The GST Council agenda has been fulfilled on just day one. The GST Council has wrapped up in just 1 day. The new 2-slab GST is here, and it is official at this point of time that there will not be a second day. Remember, this council was supposed to meet for 2 days, but now everything on the agenda has been wrapped up. Rate rationalization proposed a 2-rate structure. If you remember, viewers, first was a 5%, which was a lower slab, and then the 18% one, which was a standard slab. This effectively now means that the 12% and 28% slabs have been officially scrapped. We're also looking at other tax changes around luxury and sin goods, but no decision has been taken on that just as yet. We'll get more clarity from my colleagues Shrimi Chaudhary and Rishabh Bhatnagar, who have been bringing us the latest updates. We're also potentially seeing a difference in high-value cars, but this is the big update that is coming in right now. Widespread tax cuts are expected on daily essentials. We're looking at toothpaste, shampoos, talcum powder to 5% from 18%. My colleague Rishabh Bhatnagar joining me on the phone line. Rishabh, you've been tracking this story since early this morning. The GST Council agenda has been fulfilled on day one. It will not convene tomorrow. The new 2-slab GST is here. Give us all the details.
Right, the council has approved all the supporting steps. This is the first day of GST council. All agendas have been fulfilled. There is no second day of the meeting. Unless barely consumable items have not been fulfilled.
Rishabh, we seem to have some audio issues with you. We're going to try and reconnect with you in just a moment. But let me quickly recap for our viewers what we know so far. GST Council, remember the 56th GST Council held its meeting, and what was supposed to be spread over 2 days now has been concluded in just 1 day. In this long meeting, we're looking at something between 8 to 10 hours. The 56th GST Council concluded its first meeting, but the most important aspect is that it has approved all the proposals that were put forward by the centre. Also, no decision has been taken as yet on the additional levy. But most importantly, the council has agreed to implement the new GST rates effective September 22nd. So what we're actually seeing right now in simple language, this major reform essentially rationalizes the tax slabs into just 2 rates. This is the biggest takeaway from this meeting. 5% and 18% aimed at simplifying the tax structure and benefiting consumers on essentials and electronics. We also know that the total revenue loss due to these rate changes is estimated at around 48,000 crore annually. But this move, like we have been saying, marks one of the biggest GST overhauls since its 2017 rollout and sets the stage for smoother compliance and a consumption boost ahead of the festive season. Stay tuned with us because we're going to be on standby. We're expecting a media briefing anytime now at 10 o'clock. This is after the finance minister will be holding a press briefing post this GST Council meeting. However, there will not be a meeting tomorrow because everything on the agenda has been discussed and decided on today. The GST Council reached a consensus on the rate rejig. It's approved all of the proposals from the centre, no decision on additional levy, and the rates will be effective as early as September 22nd. The GST Council wrapping up in just 1 day with a new 2-slab GST is here. Let me quickly go across to my colleague Rishabh Bhatnagar, who sent us this report. He has been tracking this story relentlessly since early this morning. Rishabh, over to you.
Right, we're at the Sushma Swaraj Bhavan where the day one of the GST, 56 GST Council meeting has concluded. The Council has approved all the proposals of the centre. The first one, of course, being the 2-slab proposal. Now there are only 2 slabs, 5% and 18% with the additional 40% sin tax that will continue to be there. There is currently no decision that has been made on the additional levy structure so far. Some opposition states obviously have their reservations about the revenue loss and the mechanism for which these states will be compensated. That will be discussed in further meetings, is what we're hearing from the Finance Minister of Kerala as well. NDTV Profit's news break has been confirmed. The new GST rates will kick in around September 22. That is Navratri. That is what we had reported earlier as well. The total revenue loss that is estimated will be around, let's say around a rough 50,000 crores is what is expected for states, and the compensation mechanism for that is yet to be decided. That's what we have from you live from the venue. सर क्या-क्या चर्चा हुई, क्या-क्या आपकी डिमांड्स थी जो मीट हुई और कुछ जो नहीं मीट हुई?
मीट तो कुछ नहीं हुआ, लेकिन अपनी बात जो रखनी थी, जो हमारा दायित्व भी बनता है कि झारखंड के बारे में जो लॉस हुआ है, ये जो जीएसटी कंपनसेशन के बारे में हम लोगों ने कहा है, मैंने कहा है कि 2000 करोड़ रुपए का लॉस होगा, चूँकि हमारे यहाँ और बहुत स्पेसिफिक हमने कहा कि सीमेंट के सेक्टर में, ऑटोमोबाइल के सेक्टर में ये लॉस झारखंड को होने वाला है। और इसकी भरपाई केंद्र सरकार को करनी चाहिए।
तो इस पे
एक चीज़ हमने ये भी एम्फेसिस देते हुए कहा है कि आप जब जीएसटी लागू कर रहे थे 2017 में, तभी आपने कहा था कि जो मैन्युफैक्चरर्स हैं, जो मैन्युफैक्चरिंग स्टेट है जिनको ये नुकसान होगा 5 वर्षों तक भरपाई करेंगे। यानी कि आप ये मान रहे थे कि वन नेशन वन टैक्स के आलोक में मैन्युफैक्चरर्स वाले स्टेट को दिक्कत होगी, तभी आपने ये प्रावधान किया था। तो अब आप इस समय आपकी जिम्मेवारी बनती है कि आप देखिए कि जो लॉस हुआ और जो कंपनसेशन आपने झारखंड ऐसे राज्य को दिया, क्या वास्तव में झारखंड की इकोनॉमिकल स्थिति मजबूत हो गई या वहीं पे है? अगर वहीं पे है, उससे नीचे भी गया, तब तो कंपनसेशन आपको देना चाहिए।
2000 करोड़ लॉस आपने बोला, उसके लिए कंपनसेशन के लिए कोई मैकेनिज्म डिस्कस हुआ या आगे कल चर्चा होगी या अगले किसी मीटिंग में चर्चा?
नहीं, अब कल हमारे ख्याल से कोई बैठक नहीं होगी, हो गया आज की बैठक समाप्त हो गई।
उसका कंपनसेशन
हम लोगों ने उनके ऊपर छोड़ दिया। जीएसटी काउंसिल के चेयरपर्सन और उनके साथ जो स्टेट के लोग थे, वो चाह रहे थे कि अगर ना हो तो वोटिंग हो जाए, लेकिन झारखंड ने पहल किया, कहा कि साहब हम वोटिंग की बात नहीं करेंगे। हमने अपनी बात रख दी है, मानना या ना मानना आपका काम है, लेकिन जो एक परंपरा है कि जीएसटी काउंसिल में कभी वोटिंग नहीं हुई है, तो आज भी हम नहीं होने देंगे।
सभी राज्यों ने अपनी अपनी बात रखी थी। बहुत सारे राज्यों ने यही बताया था कि हमारा जो लॉस हो रहा है, जैसे पहले 5 साल कंपनसेशन सेस मिला, कोई ऐसा अल्टरनेटिव मैकेनिज्म होना चाहिए, ताकि जो हमारा लॉस हो रहा है स्टेटों का, उसको हम कंपनसेट कर सके, या हमारा रेवेन्यू प्रोटेक्शन कैसे होनी चाहिए, उस अल्टरनेटिव मैकेनिज्म की हमने बात करी थी, पर लेकिन यूनियन गवर्नमेंट ने उसको डिक्लाइन कर दिया।
2 सवाल
22 सितंबर।
सर कैसे इसको पूरा करने के लिए क्या जो है आगे?
अब हम इसके लिए हम अपने स्टेट की रणनीति अलग से बनानी पड़ेगी अब, क्योंकि रेवेन्यू लॉस तो होगा, पर लेकिन हम अपने स्टेट के लोगों के पक्ष में खड़े हैं, देश के पक्ष में खड़े हैं।
सर किस किस चीज़ों पे कॉमन कंसेंसस हो गया है?
देखो, रेट ट्रांजिशन को लेके कॉमन कंसेंसस बना है कि 2 स्लैब बनेंगे, 5% और 18%, और उसमें से एक स्पेशल स्लैब है 40% का, स्पेशल स्लैब भी बना है 40% का। रेवेन्यू लॉस का डिफरेंट स्टेट ने अपने डिफरेंट एनालिसिस किया है। तो मेरी तो डिमांड थी, मैंने तो गवर्नमेंट ऑफ इंडिया से डिमांड करी थी, जीएसटी काउंसिल के चेयरमैन से, कि पहले इसका एनालिसिस हो जाना चाहिए था कि किस राज्य को कितना रेवेन्यू लॉस होगा, गवर्नमेंट ऑफ इंडिया को कितना होगा। तो वो जो डाटा था वो प्रेजेंट नहीं किया गया। मैं बार हमने डिमांड करी थी इसको।
सर कंपनसेशन सेस पे क्या चर्चा हुई?
कंपनसेशन सेस तो अब बंद कर दिया गया है, वो थोड़ी 2-4 सिनगुड़ पे चलेगा, उसके बाद वो बंद हो जाएगा।
I also have Madhvi Arora, lead economist at MK Global Financial Services, joining me on the phone line. Good evening, Madhvi. Big news coming in. We're looking at a very, very important, significant decision being taken by the GST Council. Now, with the GST Council approving these new rates but deferring the decision on additional levy, what are the potential implications that we're looking at for businesses and consumers, both in the short and the medium term?
I think the policy intent is very clear, right? The whole idea is to essentially prop up consumption to some extent, especially at the middle and lower strata of the economy. So, the simplification of GST reform is obviously very welcome. I think for businesses and consumers alike, a simplified, regime obviously augurs well. With regard to, the sin tax that you mentioned, so. I think they are penciling in around 45,000 crore benefit out of the revenue gain owing to sin tax. So while the compensation tax will be no longer valid beyond FY26, the sin tax essentially now becomes a part of the GST regime. So that is a big revenue stream for the government of India. Net, the revenue loss that they're looking at is much lower than what we were estimating, which is around close to 1 lakh crore plus. They are looking at something close to 500 billion. So literally half of what we were expecting. We'll have to see the contours of that, but my sense is that the share of thin goods in the revenue kitty is probably much higher than what we had taken.
Madhvi, and these rate rationalizations, how do you see this now then influencing inflation and consumption trends in the coming quarters?
So, I still need to see what products go where, but our prelim estimates that there could be a disinflation effect of roughly 50 bips on annualized basis on CPI. So, over the next 1 year period, there could be a further disinflationary impulse that we can see owing to lower taxation on certain goods and shift around certain goods, but we'll have to also see what really goes in where, and especially the thin goods, as I mentioned. That I need some clarity on, but also we'll probably see the change in the CPI basket altogether. So, food and beverages, which is a category which is probably seeing a massive shift in terms of taxation, will also have a much smaller share in the CPI basket as the new basket comes into play. But net is disinflationary. As of now, we expect that on an annualized basis over the next 1 year period, it should be leading to further 50 bips disinflationary effect in the economy.
Madhvi Arora, thank you so much for that, for putting that across so succinctly. What you're seeing on your screens, viewers, is also the press briefing that is being led by the Finance Minister. Stand by for that. It's going to begin shortly. This is an extremely important and significant evening. Call it night. In fact, this is a big decision coming in by the GST Council, the 56th GST Council, concluding its meeting that was supposed to be spread over 2 days, wrapping everything up all in 1 day and giving this bumper bonanza to India.
Everybody.
And let's quickly cut across to the media briefing.
Today's press conference on the completion of the 56th meeting of the GST Council. I also welcome Honorable Union Minister of Finance and Corporate Affairs and Chairperson of GST Council, Shrimati Nirmala Sitharaman, Honorable Union Minister of State for Finance, Shri Pankaj Chaudhary, Revenue Secretary, Shri Arvind Srivastava, CBIC Chairman, Shri Sanjay Agarwal, respected CBIC members and other dignitaries on the dais. Friends, as you are aware, the 56th meeting of GST Council concluded a short while ago. The Honorable Finance Minister will be sharing with us the landmark decisions taken at this meeting. After that, we will have the question and answer session. I request you to keep your mobile phones on silent mode. Now I request the Honorable Minister to brief the media about the decision taken today at the GST Council meeting. Over to you, ma'am.
Thank you, and I thank the media for having come in so late. We concluded the meeting, and from there we have come here. And let me start by saying the Honorable Prime Minister actually set the tone for the next generation reforms on the 15th of August when he spoke from the Red Fort. So, and he desired that we give the benefit to the people at the earliest. He mentioned Deepavali, but I'll go through the decisions in detail a bit, but this reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living, so that businesses can do their business of working together with the GST with a great ease. So we have corrected inverted duty structure problems. We've resolved classification-related issues, and we've ensured that there will be stability and predictability about the GST. Rate rationalization, of course, we've reduced the slabs. There shall be only 2 slabs, and we are addressing also the issues of compensation cess. Ease of living, simplifying registration, return filing, and refunds. I'm not getting into greater details. You'll get to know about it. But then these reforms have been carried out with a focus on the common man. Every tax levied on common man's daily use items have gone through a rigorous looking into, and in most cases the rates have come down drastically. Labor intensive industries have been given a good support. Farmers and agriculture as a whole will also benefit by the decisions we have taken today. Health related also will benefit. So the key drivers of economy have been given a prominence. And much before I get into the details, I want to thank every member of the GST Council, every finance minister who attended the GST Council today. There was no absence. Everyone was present. We've had a day-long intense discussion, but I'm grateful to each one of them. At the end of the day, they said, we're all together for the sake of the common man. एक भी रिजर्वेशन के साथ नहीं समर्थन किए, मगर पूर्ण मन से भरपूर सपोर्ट दिए हर राज्य के वित्त मंत्री. इसीलिए मैं जीएसटी काउंसिल को आभार कहना चाह रही हूँ कि लंबा चौड़ा डिस्कशन चला आज, मगर आखिर हर मेंबर इसके लिए समर्थन दिए. इसीलिए मैं धन्यवाद कहना चाह रही हूँ. इधर उधर के छोटे छोटे बात हो सकता है, मगर कंप्लीटली रेट रैशनलाइजेशन में सभी मंत्रीगण समर्थन दिए. एंड मैं इस विषय में आभार पहले व्यक्त करना चाह रही हूँ माननीय प्रधानमंत्री जी को, क्योंकि पहले से ऑलमोस्ट फॉर 8-9 months ही इज बीन आफ्टर मी सेइंग आप कुछ जीएसटी में राहत दिलाओ जनता के लिए. उसका इंटेंसिव वर्क किए. हमारे एमओएस कॉम्पनसेशन सेस के ऊपर शेयर कर रहे थे ग्रुप ऑफ मिनिस्टर्स. ही वर्कड वेरी हार्ड विद ऑल ऑफ देम. सम्राट चौधरी जी वर्कड ऑन द रेट रेशनलाइजेशन, and not only the chair but the members of each of these GOM have worked very hard. I am absolutely appreciative of every one of the ministers. इस समय का मांग को समझ करके समर्थन दिए, इसलिए उन सबको मैं आभार व्यक्त करना चाह रही हूँ. There's also of course trade facilitation measures and process reform, वो भी इसमें शामिल है, जिससे enhanced verification measures which are aimed at curbing fraud have led to complex documentation, उसको भी simplify करने का, और data analysis वगैरह है. Process reform के ऊपर मैं विस्तार से आपके क्वेश्चन आंसर के समय में जवाब दूंगी. मगर primarily I'm sure all your interest is to know where is what, which one comes down in rate. उसमें एक just indicate करते हुए I'll stop my input. If Revenue Secretary has anything more he can add. उसके बाद आपके क्वेश्चन आंसर करते हुए हम बाकी सबको कवर करेंगे. Common man and middle class items में there is a complete reduction. Reduction from 18 or from 12 to 5%. I list out those items, all of whom have come to 5% from either 18 or from 12. Common man items such as hair oil, toilet soap, bars, shampoos, toothbrushes, toothpaste, bicycles, tableware, kitchenware and other household articles have all come to 5, whether they were in 18 or whether they were in 12. Similarly, reduction of GST from 5% to nil. 5 से 0 में जाने वाले आइटम्स इंडिकेट कर रहा हूँ. अल्ट्रा हाई टेम्परेचर मिल्क, द UHT मिल्क, छेना और पनीर, all the Indian breads will see nil rate. So रोटी किसी के ऊपर भी, चपाती और रोटी और पराठा और whatever it is, they all come to nil. Reduction of GST from 12% or from 18% to 5. इसमें फूड आइटम्स बहुत सारे हैं. नमकीन से भुजिया है, सॉसेस है, पास्ता है, इंस्टेंट नूडल्स है, चॉकलेट्स, कॉफ़ी, प्रिजर्व्ड मीट, कॉर्नफ्लेक्स, बटर, घी, ये सब 5% में आ रही है. फिर रिडक्शन फ्रॉम 28 to 18%. इसमें मिडिल क्लास के एस्पिरेशंस मीट करने वाले बहुत सारी चीज़ हैं. एयर कंडीशनिंग मशीन्स, TVs which are over 32 inches, all TVs now at 18%. ये I want to underline, all TVs are now at 18%. Dishwashing machines, small cars, motorcycles, equal to or less than 350 cc are all now coming to 18. Agriculture goods such as tractors, agricultural, horticultural and forestry machines for soil preparation or cultivation, harvesting or threshing machines, including straw or fodder balers, grass or hay movers, composting machines, etc., are all coming down from 12 to 5%. Reduction of GST from 12 to 5% on 12 specified biopesticides. Also from 12 to 5 is natural menthol. So किसान के लिए उनके products के लिए जो वो उपयोग करते हैं उन सब में it has come down. Again from 12 to 5 handicrafts and also labor intensive sectors. What are they? Handicrafts, marble, travertine blocks, granite blocks, intermediate leather goods. ये सब 5 में आ रही. Reduction of cement from 28 to 18. क्योंकि घर बनाने में middle class के लिए cement इतना आवश्यक है, इसीलिए 28 it has come down to 18. Health related items, 33 life-saving drugs and medicines, and they all come down from 12 to 0. From 5 to 0 and 3 life-saving drugs and medicines used for treatment of cancer, rare diseases and other severe chronic diseases. There are several drugs and medicines coming down to 5 from 12. I'm not listing each one of them out. Like that, very many other items, diagnostic kits, reagents, blood glucose monitoring system, all of them are coming to 5%. Similarly, spectacles and goggles are for correcting vision. They are also coming down to 5% from 28. I'm sure all of you are interested in knowing about automotive sector, about which you have been frequently asking us. From 28 to 18% on small cars and motorcycles which are equal to or below 350 cc. Reduction of GST from 28 to 18 on buses, trucks and ambulances. Uniform rate of 18% on all auto parts, irrespective of the HS code. Three-wheelers from 28 to 18 again. So I move to one very important thing on inversion of correction of inverted duty. The long pending inverted duty structure problem is getting corrected for the man-made textile sector by reducing GST rate on man-made fiber from 18% to 5% and man-made yarn from 12 to 5%. So that will take care of every anomaly that was there in terms of inversion. That's getting sorted out. So this actually gives effect to government's objective of the fiber neutral policy. So that's really getting seen in our action today. We are also correcting the inverted duty structure problem in fertilizer sector by reducing GST from 18% to 5% on sulfuric acid, nitric acid and ammonia, which are very important for the fertilizer sector. Renewable energy is the next. Reduction of GST from 12 to 5% on renewable energy devices, parts for their manufacture, such as biogas plant, windmills, wind-operated electricity generator, waste-to-energy plants, devices, PV cells, whether or not assembled in modules or made up in panel, solar cookers, solar water heaters, and systems, and so on. Should I stop there and leave you all to ask questions? Just want to highlight the last one, that there is a special rate which is 40%. Actually, almost all goods are between 18 and 5. If there's any change, they only can shuffle between the 18 and 5. There is one special rate which is only for sin and super luxury goods. That special rate of 40% has also been proposed and it's cleared. That will apply only to pan masala, cigarettes, gutka, and other tobacco products such as chewing tobacco, products like zarda, unmanufactured tobacco, and BD. All goods, including aerated waters, containing added sugar or other sweetening matter, or flavored, caffeinated beverages, carbonated beverages, or fruit drink, or carbonated beverages with fruit juice and other non-alcoholic beverages, excluding those specified at lower rates, will all be covered under 40%. Mid-size and large cars, motorcycles of engine capacity exceeding 350 cc, aircraft, for example, helicopters and aeroplanes for personal use, distinctly for personal use, yacht and other vessels for pleasure or sports are all under 40%. So I think I have covered most of it. One last point on the RSP. GST will be levied on retail price, which is the RSP, instead of transaction value on pan masala, gutka, cigarettes, and other tobacco products such as zarda, scented tobacco, unmanufactured tobacco, and chewing tobacco. Again, one other point which I will conclude with. Insurance services from 18% currently will go into 2-3 different categories. I'll say that to you. Exemption of GST on all individual life insurance policies. Whether term life, ULIP, or endowment policies, and reinsurance thereof, to make insurance affordable for common man and increase the insurance coverage in the country. Exemption of GST on all individual health insurance policies, including family floater policies and policies for senior citizens, and reinsurance thereof to make insurance affordable for the common man and increase the insurance coverage in the country. I think I'll leave it there. We'll answer questions.
Thank you, ma'am. Now we move on to the question
There's
and answer
one more.
session.
Sorry, I'm getting tempted to say one last thing. There are 4 points which I want you all to take into consideration. All this will be effective 22nd September 2025, which is the first day of Navaratri. The changes in GST rates of all goods, except for pan masala, gutka, cigarettes, chewing tobacco, products like zarda, unmanufactured tobacco, BD, will be implemented with effect from 22nd September 25. Except for these, for all items, the new rates will come into effect from 22nd September. I hope I'm clear on that. But pan masala, gutka, cigarettes, chewing tobacco, products like zarda, unmanufactured tobacco, and BD will continue at the existing rates of GST and compensation cess where applicable till the loan and interest payment obligations under the compensation cess account are completely discharged. I hope I'm clear. Every item will come under the new rate from 22nd September, except for these tobacco-related products, which will continue on the 28% and compensation cess where applicable, till such a time we completely repay the loan. Based on this decision of this set of tobacco products continuing till some time, based on that decision, the Union Finance Minister and the Chairperson of the GST Council is actually authorized to decide on the actual date of transition for these tobacco-related products as soon as the loan and interest is cleared. Yeah, please.
Thank you, ma'am. Before we start the question answer session, please introduce yourself before asking the question. Also speak into the mic because this is being live streamed, and also raise the placard. We will take the questions one by one. So, number 9.
Ma'am, this is Priyansh from Money Control. I wanted to ask what is the possible revenue loss that has been estimated due to the rate cuts? And secondly, for the states, has there been any discussion on how the revenue will be compensated to them?
As the Finance Minister explained, the objective of this proposal, which is the GST rate structure rationalization, accompanied with process reforms. So the first request I will have is to have the appreciation of the proposal in the manner in which it has been prepared, in order to not distract ourselves with issues which will be an outcome of this process, but the core principle of this exercise needs to be appreciated in totality. We have estimated a figure. We expect that the net fiscal implication, we would not call it as a revenue loss because that doesn't seem to be the correct terminology, but net revenue implication of this proposal is expected, we have estimated it to be around 48,000 crores. This is on the consumption base of 23-24 because that is where we had all the segregated data. What I would also request is to have to appreciate this exercise better. It's important to also understand why looking at a particular number of revenue implication and highlighting it in a manner which is not proper may not present the correct picture of this exercise. The reason being, one, typically the rate rationalization exercise would result in buoyancy effects. We do expect, as mathematically one may calculate based on consumption of 23-24, but economically that is not how outcomes will evolve. And we do expect buoyancy to play a major role because of this rate rationalization exercise in enhancing the revenue. In addition, there is also an effect on the consumer behavior. What he spends on and how much does get influenced by price, which is going to be expected to get positively influenced by this exercise. We also expect compliance to improve due to this exercise. Madam explained to you how rates which were at different levels where classification issues would be rampant, like sectors like food or transport, auto parts, etc. Once rationalized, it will improve and enhance compliance because many of these disputes would not necessarily result in revenues but would linger on and would end up having a lot of resources, both of the business and the department, in struggling to settle those disputes. So compliance would also have a very positive effect on the revenue generation. Finally, there is a technicality that when the rates change, the rate of the value chain itself changes, and tax, is paid through ITC and cash, and the actual implication of that will have to be worked out. I would just like to highlight a number from before just to explain how these changes do play out. For example, when earlier the average rates were around 15.5 in the earlier part of the GST, the compliance in the form of GST TB was around 85 to 90%. Now the compliance has improved to almost 97% as the rates have come down. We do expect these positive changes will have and we believe that in this entire exercise will be fiscally sustainable both for center as well as the states.
54.
Yeah, good evening, ma'am. Shishir from Hindu Business Line. My question is about the anti-profiteering because now so much rate reduction is there and we do not have the anti-profiteering mechanism. As of now, we understand that GST 80 can take only the pending cases and the cases directed by the courts. So what kind of mechanism we are going to have? And the second question is about the clarification on the revenue implication, that 48,000 crore is on annualized basis or just for the FY26, ma'am?
On the first question of anti-profiteering, just to give you a couple of statistics, that since inception, under the arrangement of anti-profiteering, which is no longer in place now, only around 704 cases were registered with the authority, and 60% of the cases were initiated within the first 3 to 4 years of implementation, and the total profiteering amount that was alleged was around 4,362 crores in these 704 cases. So we expect that last time too, these data shows that industry has largely passed on the benefits of rate cut. At that time too, the industry made public statements and committed, and you would have heard and you would have seen that a lot of industries have already come out and have committed that they will be transmitting this benefits too. Administratively, both at the state level as well as at the CBIC level, we will definitely be engaging with the industry and seeing to it that the benefits to the consumer, as is planned as per the exercise, is going to be transmitted to the consumers. And we do expect that since it is to the benefit of the businesses too, it is going to happen eventually. On the issue of the revenue loss, I think the question, probably you didn't appreciate the point I made the last time. It is difficult to look at these issues mathematically. So I would rather, we have done a data based on a historical number, that is 23-24 consumption. How will 26 happen will obviously depend on how consumption evolves. And we, as I said, are confident that this is going to be fiscally sustainable.
This is Deepshika from the Economic Times. One just follow-up to the revenue question. What would be what is the revenue neutral rate after these reductions? And also, on compensation cess, what happens after the loans are paid, especially on the tobacco products and high-end luxury products? Is there any decision on the future of this cess? Will there be something else coming in its place, or?
I'll have the Revenue Secretary tell you about the revenue neutral rates. But on the compensation cess, we've discussed it today very clearly. It will continue on those goods which I mentioned, the tobacco and tobacco-related products, over and above the 28%, which is the system which prevails now, till such a time that we repay the loan. And after that, there will not be a cess. And those items which were with compensation cess have already been proposed to be at 40% because they are sin goods rate. They are, as I said, 40% is not part of the scheme of things, it's at the extreme. No other good will go there except for these tobacco-related products. So they will be, the incidence will be on them at 40%. Revenue neutrality.
No, I didn't get the question. Revenue neutral would mean what? No, what? Can you explain your question? What revenue neutral would mean?
Down from 15.5, the average rate, what would it be after these reductions?
It will obviously depend upon how the transactions happen. So consumption, I am assuming what you are saying is the total value of transaction total tax collected divided by total value of transaction. So that is something one can calculate historically. For the future, as I said, we expect a lot of effects of buoyancy, compliance, consumer behavior. So this number is going to be obviously something which we will get to as we reach there.
238. Anshul Magazine from Indian Express. Just a clarification on the tobacco part, because I believe when GST was rolled out, Centre had the powers to levy NCCD on tobacco. So how will it get levied on, say, something like pan masala? If you could elaborate that. And secondly, was there any decision regarding electric vehicles? Because that was also one of the proposals submitted by the GOM.
See, on the pan masala, tobacco and everything else, under the GST, till such a time the loan is repaid, as I said, the 28% plus the compensation cess will run. Once I clear the loan, they all come to 40%. And that's what is the GST.
EV remains at where it was. Yes, it remains at where it was, 5.
214.
चूँकि अभी काफ़ी खबर चल रही थी कि जो 2500 जो अभी ब्रांडेड 1000 रुपये से ऊपर का जो शर्ट एंड फुटवेयर्स है, मैं राजीव हूँ सर दैनिक जागरण से, तो उस पर उसको 2500 उसकी सीमा की जा रही थी। जो 2500 से ऊपर है उनको उन पे ज़्यादा टैक्स लगेगा, तो ऐसा कुछ हुआ या अब सब पे जो भी फुटवेयर और गारमेंट्स होंगे 1000 रुपये से ऊपर के भी उन पे भी सिर्फ 5% ही लगेगा? इस पे कुछ फैसला हुआ? नंबर 1। नंबर 2 सर कि स्मॉल कार मिड साइज कार, तो क्या इसमें 1200 सीसी से ऊपर वाले सभी कार पे 40% लगेगा?
जहाँ तक फुटवेयर का सवाल है, आज के दिन 2 रेट्स थे। 1000 रुपये से कम वालों के ऊपर 12% और 1000 रुपये से ऊपर वाले के ऊपर 18% लगता था। सो जो चेंज किए गए हैं, जैसे आपको ज्ञात है कि मैडम ने पहले बताया कि 12% का रेट अभी नहीं है, तो 2 रेट जो अभी हैं वो 5 और 18 के हैं। 5% पे जो 2500 से कम वाली वस्तुएं वाले फुटवेयर हैं और 18% पे जो 2500 से ऊपर वाली वस्तुएं। आपका दूसरा सवाल किस इशू से था?
सीसी।
हाँ, मैडम ने आपको बताया कि छोटी कारें जो हैं वो 18 पे होंगी और बाकी सारी कारें जो हैं वो 40 पे होंगी। डेफिनेशन तो आई थॉट वो तो डिपार्टमेंट MHRT मिनिस्ट्री ऑफ रोड ट्रांसपोर्ट रेगुलेटर का है। पेट्रोल की 1200 सीसी और डीजल की 1500 सीसी होती है और उसके साथ शायद लेंथ का भी एक लिमिटेशन होता है। तो जो उनका रेगुलेशंस के हिसाब से छोटी कारें हैं वो हमारी 18 पे रहेंगी। हम लोग अलग से कोई नया डेफिनेशन उसका नहीं बना रहे हैं।
45.
I had a related question on hotels and on air travel. Again, there were 2 classifications there. So if and I suppose I think all these would be in the detailed press release that you'd be issuing, but if you could just help us.
269.
Thank you, ma'am. This is Girish from Mint. Ma'am, some states had suggested that there could be a new duty imposed on, items on the 28%, which will move to 40%. Has that been considered? And secondly, ma'am, there is no cess applicable on high-end cars, which has moved to 40%, right, ma'am?
It's an item has moved to 40%. There's nothing more to be added. Okay, because the maximum rate which you can levy on a car, on any item is 40%. Okay. And in the 40% category, we've put all the tobacco and tobacco-related sin goods and super luxury items only.
Number 3.
Hello, ma'am. This is Priyoshmita from Informist Media. Ma'am, first I wanted a clarification. I was still looking at discontinuing compensation cess around November, as in, is that the timeline we are following to repay the loans? And secondly, states had pitched for some kind of a mechanism to compensate them after the rate changes are effective because of the revenue loss. So has there been any discussion, and is the center looking at something on those lines? Thank you.
I think I've mentioned it clearly, till such a time that the loans don't get repaid. We will continue with the 28% items and the compensation cess collection over it, particularly only those items which I read out, tobacco-related products, and they will continue till such a time I repay the loan, which is the council has authorized the finance minister to stop that collection the moment the loan is repaid. I cannot speculate on the time now whether it is October or November, but it will be well within, I think, this calendar year.
Number 2.
I think, first of all, I would like to request the media to look at the GST Council as where the center and the states are seated together. I mentioned this in the council also. The center may be a 1/3 partner, the states put together can be 2/3 partner. But we are all in it together. So anything that which is gained or lost is for everybody. It's not as though states have lost, the center's not gained. If all of us have lost, all of us have lost. And I don't think, and I'm glad that the Revenue Secretary had made this point in the Council, it's a revenue instance. The incidence is what is the matter. It's not a static situation. Once the rates have come down per the economic theory that you may want to quote, the buoyancy goes up. People come out to buy more. And therefore, this discussion has happened in today's council. And I have put this argument before, that the center and the states are seated equally. And any gain or any foregone, none of that is perceived, because when rates are coming down, we expect the market to be more buoyant, people to come out and spend more. However, all of us are sitting there together. Compensate for states' loss, even center is losing, if anything. Center loses more in a way. Because 50-50, you divide from my 50, another 41 goes back to the states. So I want the media, particularly those who are covering the economy, finance ministry, to understand in the GST Council, the center and the states are together in it. Nobody is a donor and nobody is a donee within the GST Council.
Number 2.
Can
Pallavi from...
Can I just supplement, because this issue has come from many. So our earlier request was, there are two parts to this issue, and I would just request the indulgence of the media also on this. This repeated use of the word called revenue loss. So obviously somebody has lost to somebody or something to that effect. Kindly understand, this is a tax rationalization exercise which is resulting in reduction of rates of taxes to be paid, let us say, by a common man. Rates paid by on food, on health, on agricultural implements, on labor-oriented sectors like job work. I am not very sure whether loss is the right interpretation of government saying that we have given money to a consumer. It is an economy that we are talking about. Both of them are there. After all, the money which government will not collect as tax is going to be remaining in the pockets of that consumer who will end up using it. So my request is this terminology loss, because it presents the impression differently from, and which is why I had requested. There is a revenue implication, naturally. So the second part to this understanding is that revenue implication is a dynamic number, because it will depend on how response happens. Mathematically, one can calculate, that can only be done on historical data. But that historical data may not end up to be true, because we do expect behavior of consumer changing, buoyancy factors changing, compliance improving, and this has been the historical reality. You would remember that after compensation cess went away, the buoyancies really went up of GST. So we do expect things to move in the positive direction. We have done our numbers and we believe it is fiscally sustainable. The number that I told you is based on 23-24, and even with projections and expectation on other things turning in the positive side, which we are hearing both from the consumers as well as from the industry, we expect this exercise to be fiscally sustainable.
Okay, I'm Pallavi from CNN News 18. Ma'am, two things over here. There were 8 states which actually said that we want something called the state level GST on products like alcohol, petrol, and real estate. Was this even discussed at the GST meeting today? And second is that they are all talking, I'm sorry to use that word, but revenue loss. 15,000 crore revenue loss is what Siddaramaiah said. I know there are states like Karnataka and Kerala who insisted on that, and I think that is why your meeting was delayed. How do you want to actually address that? Because many of them are also facing problems like they're talking about floods. And finally, when you are talking about a GST restructuring, was the tariff turmoil with America an important consideration?
The tariff turmoil is not a matter which influenced the GST reform, because we've been at it now for more than 1.5 years. Some group of ministers was working on rate rationalization. Some other group of ministers a bit later was working on insurance, and so on. And compensation cess was a reality, that it is going to end the moment you paid back the loan. None of this has anything to do with the tariffs. So, no, there's nothing to do with the tariffs at all. One. Second, you were talking about petrol, diesel, 8 states. No, none of that was subject of our discussion because that is not part of the GST Council at all. And the third, numbers are being thrown around. This much loss, that much loss. You've just heard the Revenue Secretary detail on the basis of 23-24 numbers. Am I right? 23-24 data, which is the last available for all the categories. And he stated what is the net amount that we'll have to be looking at. So there is nothing more. I'm not going to join forces to argue on, oh, somebody said this much, somebody else said that much. Our data is here, we put it, and that is coming out to all of you all as well in the press note.
237.
मैम तरुण शर्मा फ्रॉम जी बिजनेस। मैम 2 सवाल हैं, एक क्लैरिटी के लिए पूछना चाहूँगा। जो टैक्स इंसिडेंस है, आपने कहा कि हाईएस्ट ब्रैकेट जो रहेगा वो 40% रहेगा, तो जो अभी तक सेस लगता था वो नहीं लगेगा। अब जो भी चीज़ें होंगी वो मैक्सिमम 40% पे होंगी टबैको प्रोडक्ट्स को छोड़ के। और दूसरा सवाल मैम, जो अनमैन्ड एयरक्राफ्ट्स, एक ड्रोन के लिए भी एक एजेंडा था, क्या मैम उस पर भी कोई फैसला हो पाया? एक चीज़ मैम, एक क्लैरिटी और चाहेंगे कि जो डीलर्स के पास अभी गाड़ियां खड़ी हैं, यदि वो 22 तारीख से पहले 22 तारीख के बाद बिकती हैं तो वो किस कैटेगरी में आएंगी? क्या जो अभी का जो टैक्स स्ट्रक्चर है उसमें कैलकुलेट की जाएंगी या नए वाले टैक्स स्ट्रक्चर में कैलकुलेट की जाएंगी?
शुरू में जैसे माननीय मंत्री ने आपको बताया कि ये हमारा अब 2 रेट जीएसटी स्ट्रक्चर हो गया है, तो 5 और 18 आर द रेट्स। 40 is what we consider as a special rate, and on the lower side, apart from exemption, there are some other special rates. Special rates are meant to take care of either very, very unique sectors or unique requirements or certain policy positions that government may have had on those. Typically, the special rates are considered special because they are not by their very nature part of a general structure. So they are not expected to be open-ended. It is not like this is a rate, then you can swing people things between here and there. 40 is expected, items have been identified and will be positioned there. This is the way in which, that is why this is called GST rate rationalization structure. So it's a rate structure itself which has been rationalized, within which then certain principles have been followed to fit things. That is point number 1. What was your second question? I would suggest that specific items and procedural issues off the cuff response will not be a good idea. Department will be issuing detailed instructions about everything, and we will see to it that those who need it receive it in transparent fashion, in a timely fashion. वही जो आपने बताया ना, ट्रांजिशन वाले जितने इश्यूज हैं इम्प्लीमेंटेशन रिलेटेड, आज जीएसटी काउंसिल का डिसीजन हुआ है, तो उसको ऑफ द कफ रिस्पांस देना ठीक नहीं होगा। वो हमारा डिपार्टमेंट डिटेल में सारे इश्यूज को एड्रेस करते हुए जवाब देगा उसका। और आज इसके बाद मैडम ने जैसे इंस्ट्रक्शन दिया है, एक फ्रीक्वेंटली आस्क्ड क्वेश्चंस का एक लिस्ट भी इशू होगा, प्रेस नोट होगा, जिसमें सारे डिटेल्स होंगे आइटम वाइज, जो आप देख सकते हैं।
189।
मैम, मैं आलोक प्रियदर्शी CNBC आवाज़ से। सबसे पहले जीएसटी काउंसिल के चेयरपर्सन के तौर पर आपको बधाई, क्योंकि आपने पूरे कंसेंसस के साथ ही इसका लागू करवाया। मेरा सवाल ये है कि रेट में कटौती हुई है, सबको फ़ायदा होगा, लेकिन ये रेट आम आदमी तक इसका फ़ायदा पहुँचे, उसके लिए क्या कोई मैकेनिज्म बनाया जाएगा? क्योंकि एंटी प्रॉफिटरिंग मैकेनिज्म अभी है नहीं, या ऐसी एंटी प्रॉफिटरिंग बॉडी है नहीं, तो कैसे इसको रेट को हम जो कंज्यूमर है उस तक पहुंचाएंगे ताकि कंपनी इसमें बेनिफिट ना करें, ग्राहकों तक उनका फ़ायदा पहुंचे?
हमने
सर हिंदी में बता दीजिए।
एंट्री प्रॉफिटियरिंग का हम लोगों ने जैसे अभी थोड़ी देर पहले जो उत्तर दिया, उसमें बताया कि पिछली बार जब ये एक्ट में एक प्रोविज़न था, उस प्रावधान के अंतर्गत 704 केसेस रजिस्टर हुए थे कुल मिला के, जिसके करीब 60% केसेस पहले 3 से 4 साल में थे, जब उम्मीद होती है कि ये इश्यूज़ आते हैं ज़्यादा। और टोटल जो प्रॉफिटियरिंग का अमाउंट एलेज किया गया था इन इश्यूज़ के ऊपर, वो 4,362 करोड़ का था। तो इन फिगर्स को देखकर ऐसा नहीं लगता है कि इंडस्ट्री ने ट्रांसमिशन में बहुत ज़्यादा कोई मतलब इश्यूज़ आए, कंसिडरिंग द स्केल ऑफ द एक्सरसाइज। तो इस बार भी हम लोगों को ये काफ़ी कॉन्फिडेंस है कि इंडस्ट्री रेट्स को ट्रांसमिट करेगा। पब्लिकली काफ़ी मेजर सेक्टर्स की इंडस्ट्री ने ऑलरेडी ये पब्लिकली कहा है, कमिट किया है कि हम इस रेट को ट्रांसमिट करेंगे। इकोनॉमिकली ऑल्सो हमें लगता है कि फोर्सेस ऑफ मार्केट कंपटीशन विल वर्क इन दैट डायरेक्शन। एडमिनिस्ट्रेटिवली CBIC और स्टेट लेवल पे वी आर एंगेजिंग एंड गोइंग टू एंगेज विद इंडस्ट्रीज टू सी दैट द बेनिफिट जो गवर्नमेंट कमिटेड है इस बात के लिए कि ये कंज्यूमर तक पहुँचे, वो पहुँचाने के तरीके देखे जाएंगे।
49.
Ma'am, Prakash Predashi from ET now. So what will be the overall impact on GDP after implementing these rate rationalization decisions?
Again, something on which you would like to speculate on. It depends on how people have received this rate reduction. And they'll have to come out and once you have a couple of months going with all the purchases, then we'll be able to get some number. It'll be too much for me to speculate on it now, but I think it'll have a very positive impact on the GDP.
209.
Prashant Sahu from Financial Express. So the rate reductions will have a positive impact on the consumption and it will also help widen the taxpayer base. So the revenue implication, as the Secretary said, is about 48,000 crore. So as per your calculations, how soon it will be, neutralized, given that the buoyancy will be there, consumption will increase, and the taxpayer base will widen?
So this seems to be different ways of asking the same question, which is already answered. I don't think you got what I explained. I did not say 48,000 is an implication for this year. I said 23-24 data of consumption says, if you calculate, with that consumption being what it is going to cost 48,000 crore. But then I also supplemented it by saying that these numbers will be dynamic because of the parameters I explained. So we'll have to see as we go along, as we go further. But as Madam said, it is going to have a positive impact on economy. We are hopeful. And we do believe that this is going to be positively taken in both by the business, trade, industry, as well as consumers.
184.
मैम जय मिश्र दूरदर्शन से प्रधानमंत्री जी का भी रिएक्शन आ गया, उन्होंने आपको बधाई दी है, जो जीएसटी काउंसिल है उसके सभी सदस्यों को बधाई दी है, लेकिन सबसे लास्ट में उन्होंने कहा है कि ये रिफॉर्म्स छोटे और मध्यम उद्योगों को ईज ऑफ लिविंग में मदद करेंगे। तो ये शायद संदेश पहुंचना चाहिए, उस पर मैं थोड़ा सा आपसे क्लैरिफिकेशन चाहूँगा, कैसे फ़ायदा पहुँचाएगा एमएसएमई सेक्टर को?
एमएसएमईज को बहुत सारे फ़ायदा है इसमें, क्योंकि आपने शुरुआत में से ही हम बोल रहे हैं, वो आपको मैंने इस प्रेस कॉन्फ्रेंस में भी कही, स्ट्रक्चरल रिफॉर्म भी किए हैं। कंप्लायंसेस के लिए उनको बहुत समय नहीं लगेगा और सिस्टम भी सिंपल हो गया है, रजिस्ट्रेशन भी सिंपल है, और क्लासिफिकेशन के वजह से जो कन्फ्यूजन आता था वो भी अभी नहीं होना है। ऊपर से इन्वर्शन करेक्शन जब हम कर रहे हैं, रिफंड्स तुरंत मिलेगा, और जहां इन्वर्शन नहीं है पैसा लॉक नहीं होएगा, मतलब मंथ तक यू वेट करो, आई मीन यू हैव पुट द मनी इन, यू आर नॉट गेटिंग द रिफंड, वो सिचुएशन अभी नहीं है। लॉक्ड अप मनी का प्रॉब्लम जो एमएसएमई को बार बार आता है वो नहीं होने वाले हैं। ऊपर से उनका रॉ मटेरियल और उनका इंटरमीडिएरी प्रोडक्ट्स जो उनके लिए चाहिए वो सब रेट में कम हो रही है, इसीलिए उनका पूरे बेनिफिट ही ऐसे मैं समझ रही।
188.
Hello ma'am, this is Suchandrima, I'm from INS. So is there any changes in GST filing?
Is there any rate changes in the GST filing? Of course there are.
आप बताना चाहेंगे प्रोसेस रिफॉर्म के 2-3 एलिमेंट्स, रजिस्ट्रेशन एंड
देखिए इसमें जैसे regarding the process reforms, many steps have been taken. One is that GST registration process has been simplified especially for small businesses or where they are trusted applicants. So small businesses who on their own assessment estimate that they will not be passing on more than 2.5 lakh of input tax credit, they can opt for that simplified registration, and that registration will be granted within 3 working days automatically by the system itself. And in case then after obtaining this registration, if they grow and they want to transition to the normal registration, for that again there is a provision, and based on the risk analysis for the normal category of registration, they can be transitioned to the normal category. Similarly, there is a process reform which has been approved by the GST Council or recommended by the GST Council is regarding the refund in case of zero rated supplies. Presently there is a provision of granting of 90% the claimed amount on provisional basis. Now GST Council has recommended amendment in the rule, and which prescribes that on the basis of identification as risk evaluation by the system, this 90% amount can be granted within the 7 days by the officer. So earlier, using that provision, the percentage noticed by us was very less. But with this amendment in the rule, the percentage will go up substantially. In addition to that, in case of inverted duty structure, refund can be claimed, and in those cases presently there is no provision of granting of 90% amount on provisional basis. So amendment in the law has been recommended by the GST Council, and because this amendment is likely to take some time because it will require the approval of the Parliament, and the Honorable Finance Minister has instructed the Central Tax Department that in such cases also, like in case of zero rated supply refunds, in such cases also, pending the amendment in the law on the basis of identification as risk evaluation by the system, in such cases also the refund should be granted to the taxpayer so that their liquidity position improves and the amount get refunded to them which they can utilize in their working capital. As far as filing, other filing, you mean to say normal monthly return filing? In monthly return filing, presently there is no change which has been recommended by the GST Council.
237.
मैम, आपने अपने प्रेस कॉन्फ्रेंस की शुरुआत में बताया, अंकित हुए एबीपी न्यूज़ से, कि इसका सीधा फ़ायदा आम उपभोक्ताओं को मिलने वाला है, देश के आम उपभोक्ताओं को। लेकिन हमको पता है कि जब जीएसटी इंट्रोड्यूस हुआ था उसके बाद भी इसको लेकर राजनीति भी हुई थी, गब्बर सिंह टैक्स जैसे शब्दों का इस्तेमाल किया गया था, और आज जब रिफॉर्म की बात हो रही है तब भी विपक्ष के कुछ नेताओं के जो है पोस्ट आने लगे हैं उसी शब्दों का इस्तेमाल करते हुए, ये कहते हुए कि जो अधिकतम स्लैब था 28 का उसको बढ़ा करके 40% कर दिया गया है। मैम, क्योंकि पॉलिटिकल है।
क्या टोबैको के ऊपर 5% टैक्स मांग रहे हैं कांग्रेस पार्टी? क्या तंबाकू के ऊपर और गुटखा के ऊपर कांग्रेस पार्टी चाहती है कि हम 5% में दें? मुझे समझ में नहीं आ रहा है कि कांग्रेस पार्टी उनके समय पर जीएसटी लागू करना असंभव माने, क्योंकि ट्रस्ट स्टेट केंद्र सरकार के ऊपर ट्रस्ट नहीं था। वो कॉम्पनसेट कर पाएंगे, कुछ अश्योरेंस दे पाएंगे, इन सभी विषयों के ऊपर यूपीए सरकार के ऊपर स्टेट गवर्नमेंट्स भरोसा नहीं किया, इसीलिए वो लागू कर नहीं पाए। हम मोदी जी के नेतृत्व में लागू भी किया और सेकेंड जनरेशन रिफॉर्म्स भी कर रहे हैं जिससे जनता को राहत मिले उनका डे टू डे आइटम्स के ऊपर। और एमएसएमई और लेबर इंटेंसिव यूनिट्स को भी राहत मिले, जिससे वो ईसी कंप्लायंस भी होगा, रेट भी कम होगा। कांग्रेस पार्टी को मैं कैसे क्या शब्द उपयोग करूं, उनके माइंड तैयार करें। अपोज करना है कि समर्थन देना है। अच्छे विषय जो जनता के लिए हित में है उसमें समर्थन देने में कोई जनता आपके ऊपर कोई कंफ्यूजन में नहीं रहेंगे, मगर अब जनता आपको सही जवाब देंगे, क्योंकि जब कट कर रहे हैं रेट उसमें समर्थन देने में संकोच और ऊपर से कंफ्यूजन करवा रही हो जनता के मन में। जनता आज आपके गुमराह वाले काम में आपके साथ नहीं है, आपको एक्सपोज करेंगे जनता।
Number 4.
Nikunjori from Reuters. Ma'am, the decision regarding exempting health and life insurance premiums, there was some apprehension that the industry had that exempting in the sector and premiums will deny them input credit. And so do you see this lowering premiums, and will this help the government in achieving its target of letting insurance for all?
See, this was so much questioned last year. In the parliament, opposition members of parliament and many members of parliament from various states questioned, saying, you want to tax insurance premium? After a detailed study, taking stakeholders into confidence, we have come up with this so that families and also people who take individual insurance get their benefit. Of course, we'll make sure that companies pass on this benefit to the people who are taking the insurance cover. So beyond that, I don't think we should have any doubts about where the government's intention lies. We want to give people who are looking at medical insurance, at least the families, individuals, get the relief. But if there's more, I'd like to have Revenue Secretary add on it.
Just one fact that the insurance companies themselves have publicly assured that they will be passing on the benefit.
54.
Ma'am, Anuradha from Economic Times. A small clarification on compensation cess on coal. Like what will happen to that? Because you...
as Madam explained in the beginning itself, that compensation cess is linked to compensation and as of now linked to repayment of loan, and so whichever day it is getting over, it will be the compensation cess levy has to stop. Current decision is that the compensation cess will only continue on those items which Madam listed out till the time the loan is repaid. On rest of the items, compensation cess is not going to be there at all. The new GST revised rate will apply. On coal, the revised rate would be 18%.
Okay, thank you.
47.
Ma'am, Rishabh Bhatnagar here with NDTV Profit. Currently, online gaming deposits are taxed at 28%. With the online gaming ban now, are there any special provisions for esports and online social games?
So the last question, 255.
Hello sir. Hello ma'am. Amrit Prakash from ANI. सब लोग देख रहे थे जीएसटी रिडक्शन को, आप टेलीविज़न पर भी देख रहे होंगे। कितना इफेक्टिव होगा ये आम कस्टमर्स को लेकर के, और कैसे कंज्यूमर्स तक पास होगा, ये पहला सवाल है। और हम बीते दिनों में भी देख रहे थे एग्रीकल्चर सेक्टर को लेकर के बहुत बातचीत चल रही थी, और हमने इसमें भी देखा है कि एक शार्प रिडक्शन देखने को मिला है फ्रॉम 12 to 5। जब हम बात करते हैं इरिगेशन सिस्टम्स को लेकर के, ट्रैक्टर्स को लेकर के, तो हाउ डज द गवर्नमेंट व्यू दिस मूव इन टर्म्स ऑफ बूस्टिंग फार्मर इनकम्स इन पर्टिकुलर मैम? एंड व्हेन वी टॉक अबाउट ग्लोबल कंपटीशन ऑफ इंडियन फार्मर्स, तो उनकी इनकम को इंक्रीज करने के लिए और कंपटीशन में को ध्यान में रखते हुए एग्रीकल्चर को कैसे प्रॉफिट हो, उसको लेकर के गवर्नमेंट किस तरीके से काम कर रही है?
जी, जीएसटी जैसे आपने ही खुद रिकाउंट किया कि सब्सटेंशियली फर्टिलाइज़र सेक्टर में सारे इन्वर्टेड ड्यूटी का प्रॉब्लम को सॉल्व किया जा रहा है, विच विल एनेबल द डोमेस्टिक प्रोडक्शन ऑफ फर्टिलाइज़र टू बी एनकरेज्ड। और एग्रीकल्चरल सेक्टर के जितने ये इम्प्लीमेंट्स 12% पे थे, इनको 5 पे ले जाया जा रहा है, which will encourage, which will do two things. One, it will make it cheaper for farmers to get it. Two, we expect more farmers to be able to use it, which enhances productivity of the farms themselves. So there will be positive effects on this. Obviously, in addition to it, all that government is doing in agricultural sector through policies and programs and other implements, those will continue and eventually will be supplementing those efforts by this tax rationalization.
I want to thank all of you for having joined the media briefing at this late hour, and also want to thank the Honorable Finance Minister and the dignitaries on the dais for the briefing on the groundbreaking decisions of the GST Council meeting today. Thank you, everybody.
In fact, the Finance Minister at the press briefing of the 56th GST Council meeting, after very, very significant decisions were taken. Remember, the rationalization now has the GST into two structures, and the Finance Minister even going on to list the number of items that are now under the specific tax slabs. We've been showing them to you on your screens. Remember, this meeting was actually supposed to take place over 2 days, but now the Council wrapping up the entire agenda in just 1 day. We saw different finance ministers from all of the states actually present at this meeting. The finance minister even said that there were no absentees. Finance ministers from every state, including senior leaders from the center that we saw present at the press briefing, were present. And this extremely crucial decision that has been taken this evening, the GST reform will boost consumption. We're looking at 2 tax slabs now, as opposed to the other ones. The items taxed at 5%, the items taxed under 40%, like the finance minister clearly identified, were going to be tobacco and the related products. But of course, that would be at 28% first before the loans are paid off. Right, now the items now at 5% GST are cornflakes, butter, ghee, handicrafts, marble, granite blocks, and we're also seeing the top takeaways from the GST Council meet. One is, of course, like the centre had proposed, only 2 GST slabs. Then the corrected inverted duty structure was the other takeaway. Also addressed issues of compensation cess and resolved classification issues, and focused on ease of living and structural reform. And that's a wrap on this edition of the broadcast. We slip into a short break right now.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म लेकर के आ रहे हैं दिवाली के अंदर.
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy to India Inc.'s biggest voices, join us as we decode what these reforms mean for businesses, investors, and